No, this is not an entry, don't worry, it's a paper trading. Just took it to start with the topic I wanted to talk about. So yeah, welcome guys, and after such a long time I somehow managed some time to talk about a few things with you guys. I was actually in the middle of editing a video that I was making. However, I'm willing to talk about things now than talking about things in the video. So I will wait a while for people to actually join, and after that I will actually consider talking about those. So yeah, if you are new here, say hi to the chat. I will quickly just check the settings and pop out the chat so that I can read and interact with you guys. I don't care about what's happening in the market. Check the settings. I just kept it running so that things does not look very blind when I'm talking about the things. Pop out. Okay. For my chat. Now I need to bring back my OBS to see the I hope I have selected the right settings for the stream. I don't know how much delayed it is, but if it's delayed, okay, let me just close this thing from my chart. Okay, I'm not looking into a trade around this area. I have done what I had to do during the London session, and by now you all know I'm a London session trader. So whatever, like if it goes lower, let it go low because it's not 9:30 yet. Yeah, so say hi and let me know if you're here for the first time. I have a few things that I wanted to share with you guys so that you guys can understand how exactly I look into a chart. And it's Friday, so whatever I have done before the London session, I'm willing to talk about those things and a few other topic that I thought like that may help you guys in terms of understanding how I look into a trade. So first thing, let me bring out my today's trade and show you guys a few things. Okay, don't worry about what's happening in the market. It's not about the price action, it's not about anything. So this is, sorry, I don't know how clean it is. This is one of my account's P&L history. At the very beginning of the account I had a loss, like I had a losing day. After that it was gradually going up. All these dips you are seeing, these are the payouts and current balance, things like that. So I hope this making sense to you guys. I don't know how much you are able to see the thing. Another thing that I wanted to show you guys is this. Okay, this is today. The profit total was 2600 in one account I'm showing. Okay, of course I have 3 funded account. By now you should know. If you don't, now you know. So this is today's P&L. As you can see, I have 81.82% win rate. I have one losing trade the whole day, and that was also, I was willing to take that risk because the risk was only $220 altogether. As you can see over here, I lost that 220. Yes, I had option to exit out early, but still I wanted to let it play because I know that better opportunity will come. And yeah, I mean, these number of winning trades or all these you are seeing, these are taking partials. Okay, these are not this many trades. You see, like number of losing trades, it's showing 2, it's not two trades, it's one single trade that I lost, and two contracts it filled me up in two different levels. Okay, so one single loss, and not 9 trades, not 10 trades, not 11 trades, nothing like that. So what happens is, when I trade, I have to take partial by selecting this. So this is a sell limit order. When market hits it, they count it as a order execution. Okay, so there are some issues with that thing. I don't know how I can actually sort like how I can get the actual PNL. So my personal bookkeeping or personal journaling, that is what helping me to decide what exactly happening. So yeah, I mean, guys, let me know who is watching at the moment, so that I can, like, I'm not sure how many people are watching right now, so I wanted to talk about a few things today, and I hope this will help you guys a lot by understanding those facts. You guys will be able to actually make your days better. Okay, I mean, you will be able to reduce your losing days. So okay, my brother is here, I can see my elder brother, he's my elder brother. Okay, so I was actually in middle of making a video here, but the video turned out to be a very long one. Okay, because in between I was talking about few other things. This is a problem. So I wanted to make a live stream so that you guys can actually join and watch those things with me. I took a crazy entry with on this fair value targeting this high. That was one of the profitable trade. The loss that I took was, let me show you on the 5 minutes for the first time. Where was it? Here. No. Oh, sorry, not the 5, actually on the 15 minutes. You see this 15 minutes fair value gap. I was expecting this move to hold the price, but it didn't hold. So as a result, I took only $220 loss on that specific trade, because it was a very short thing. Now let me first talk about the topic that I was willing to talk. After that, you will understand what I'm saying over here and why I was looking for another entry from this fair value. There is no more fair value around this area. Market came until this far. Now whatever is happening in the market, I really don't care, because I don't trade the New York session. Okay, so I will talk about the London session. I will talk about my entries, and before that I will give you guys a few things that will make you guys realize how I look into a chart or how I look into the trade. Now here is the title. It's a text that I created before starting the stream when the countdown was going on. Now 5 questions to ask yourself before entering into a trade. Okay, this thing is very important to understand. 5 questions you must ask yourself before you enter into a trade. The first question is, what is your higher time frame bias? On the weekly, let's start from the weekly. Okay, and if I delete it, will actually remove everything. Let me, oh come on, let me remove this. Now here on the weekly, what can we see? Market previously traded from a weekly bullish fair value, expand higher, created new fair value. Market traded into that bullish fair value, broke the structure, expand higher, create a new fair value. Market traded into that. So for this week, our expectation was market will go higher. Now there is another thing. If you know by now that I look into the candle close, if it closes above the previous, especially the daily candle, if it closes above the previous candle's high, I mark that buy side liquidity as my next daily target, and on the weekly level as well, since that's exactly what happening over here. Market closed above that. As you can see, it closed above this, like this way. Okay, it closed above, so my target was this higher run buy side liquidity. It gave me that, closed above. So this was my target. It created an inside candle that took the sell side and retested or revisited this fair value gap. So now that that happened, I'm more confident. Also, what happened during this moment, it took the sell side, it failed to close below that sell side liquidity. So at this moment, remember, this liquidity was already due. Okay, so this weekly liquidity was already due, and here when market failed to close below this level, and when it was retesting this specific fair value, see the midpoint, it respected that beautifully. This high is now again due for me. So these two liquidities are relatively equal. At the same time, both are due. This week, that's exactly what market delivered. If I'm not wrong, what's happening? Oh, okay, so it's a weekly candle, so I must need to exit out of that replay mode because it's in 3x. Okay, so that's exactly what the liquidity market took. Now today's session I finished at this high, or maybe there was on the hourly level there was another high if I'm not wrong. That high was the high I targeted. Okay, like this is where I finished my session, this high. When this high was taken, I exited out of my profit. I'm done. This candle happened at exactly 8 AM. So 8 AM, it's already New York. Like after 7:30, it overlaps. It starts to overlap. After 7:30, it starts to overlap. Let me show you on the 15 minutes time frame the 7:30 candle. So from here the 7:30 started, the overlap started, market came lower at exactly 8:30. This is the candle. It created a huge wick. The buy side or the entry you saw on the paper trading, this is, I just kept it because when I'm fixing all the things, I wanted to keep something running so that people comes and waits until what happens they can see until I start talking. So that's why I kept it running. But you see this huge candle, it took the liquidity, it failed to displace above. So this is a signal that possibly after this market can fall. It's falling now. Look around the, let me go to the hourly time frame on for once. You see this high was, when it was taken, it displaced beautifully. So this fair value, it retested that, it took that high. Same calculation if you want to do, like closed above, so this high, that way it works as well. But the higher you go, it's better. Now on the monthly level, I'm not going there because on the monthly level you will see the similar thing happening, coming out of a bullish monthly fair value gap and expanding higher, things like that. Okay, now few things you must keep in your mind before you consider entering into a trade. Friday, okay, Friday is the day week finishes. On the weekly chart, this upper portion will be a week. Most of the, like 99% of the time, you will see Friday it creates the week on the top, if on the bullish candle, on the bearish on the bottom. Every weekly candle has that week on the top and bottom. When market started on Monday, this is maybe Monday or Tuesday, I cannot remember, but whatever the day is, the weekly lower week was created, then it expand higher. Now it can expand higher, there is nothing wrong with that, but by the end of the day you will find your week over there, especially around the PM session. Expect that on every Friday. On every monthly candle you will find a week. This is January, or the first month of this year. On this month market was expanding higher, market came lower. Now on the monthly level, can you see the same thing? Like took the buy side liquidity, closed above, buy side liquidity, closed above, again buy side liquidity, closed above. So this buy side was due, that buy side was cleared. Now how far it will expand, that depends on what's happening on the market on the lower time frame level comparing to the monthly level. It's coming out of a bullish fair value, so you can say this area it didn't work, right? Because it closed below, it didn't take the sell side liquidity. Yes, because it reached into your higher time frame point of interest, or it rebalanced the imbalance, okay, around this area. So that's why you have to have those knowledge in your mind. But if you look before those candles, this candle failed to close below. So what was the target? This buy side. And this day, or this month, the next month it closed, took the buy side, closed above. This buy side was due, this buy side and this buy side. From this specific month, when market closed above, I'm already seeing that market reached to the monthly level of the fair value. Now it's expanding higher, so I'm accepting that. But remember, market never leaves anything due. So bullish run, enjoy the bullish run. Market is bullish for long time, enjoy that bullishness. When market will be bearish, these liquidities will be the target for the market, okay? That moment you will see the bullish fair values that it has created around this area, or even it will create going higher. There is another fair value over here. This sort of fair value, when market will be bullish, it will disrespect those, the way it disrespected this specific fair value, okay? It came closed below, it took the liquidity, rebalanced the, this is a monthly breakaway gap. So why I'm saying breakaway gap, let me go to NQ for a second. See this, I have it already on the NQ, it's drawn. When the liquidity was taken and this liquidity was taken, market tapped into this fair value gap, it left some portion open. Now for this specific level, I can see the liquidity grab and market structure shift with displacement. What do I mean by that? The high was taken, body closed above the high with fair value, and below I have no fair value. This is the first ever fair value for this market structure shift. When market expanded higher, this is the level market came. Now there is a small little retracement around this area. On the weekly level you will find this retracement valuable. So this is a monthly swing low, okay? Now this has only one one higher low on the left and multiple higher lows on the right. But since it's a monthly candle, I'm looking into that one candle. If it's a 1 minute candle, or even 5 minutes candle, or even 15 minutes candle, I will look into at least 2 candles on the left, 2 candles on the right. On the monthly level, it's a huge thing. Every candle takes 1 month to form, so I cannot look for a swing high or swing low for 3 months. That's why even ICT counts one candle as a swing low. So from this swing low to this swing high, if you look into the premium and discount, come on, where did it go? I don't know. Okay, you see, it just, that's the equilibrium level, or the level where it's equal or balanced. It came to the discount by a little, then it started going higher. So everything happens in those premiums and discounts. Even all these retracements, these liquidities, look from the low to high, it didn't reach, okay? First thing, from here to here, this swing low didn't reach to the discount. Market expanded higher, didn't reach yet, or didn't reach around this area. So it expanded, I'm expanding. When market reached around that area, took the liquidity, retested the discounted array, then it started going higher. So this is why I'm extending this. You will find it if you are watching ICT's video, you know what I mean by extending it. He has talked about it so many times. But anyway, monthly level, when market structure was shifted over here, market traded into that fair value, market going higher. When this structure, see, I have MSS written here but BOS written here. Why break of a structure? Because there is no swing low around this area that market came to take the liquidity from on the monthly level. But every week on the monthly level, every low, every high has a huge amount of liquidity. Don't get me wrong, but what I'm saying is there is no clean swing low like this or this or this, anything like this, okay, on this specific area. After the market structure shift, market retraced. Now market went above that level with displacement. The body closed far away from this level. Displacement is when something is moving or leaving a specific area and going rapidly. Okay, so like that's the simplest way I can say this thing. Now broke the structure, created fair value, market going higher. We can expect later on a retracement to this level, since it has the order block as well around that area. We can expect, but when it will be bearish, I don't think that this sort of area will be respected for longer. Okay, like maybe a short-term reaction from this area, it will go higher. Now let me come to the point. Ask yourself, what is your higher time frame bias? On the weekly level, I'm seeing this, that it every time it's reaching to a bullish fair value gap, it's expanding higher, breaking above the previous swing high or the structure and displacing above that, creating new fair value, retested. Now it's going higher. So this swing high is valid for a possible break of a structure. If it can stay above that level for the next week, I will be bullish too. I will be bullish until I'm wrong. Okay, until I consistently hit losing trades. Now this is the weekly, that can be your higher time frame. Daily can be your higher time frame if you are not used to it the weekly, but it's better if you can actually look into the weekly levels. Okay, from daily, when market was retracing from this high to this level, I already said and showed what I'm looking into. So let me actually remove all this just to make the chart clean, everything. Okay, just I'm not deleting from the other side because this writing will be removed or moved. When market was retracing, I had a fair value lower, okay, the weekly fair value, but I said over and over again, you can watch my videos, that first thing is I'm willing to see around this area, that this fair value that is aligning with my OTZ or optimal trading zone on the daily level. I want to see this fair value, if it's holding or if it's failing. If it fails, I will look into the weekly level, because if it fails, this is the liquidity that market will take, and the weekly was sitting somewhat around this level, so that is where market will come. But from the daily, it didn't fail. Okay, when market took this liquidity, the same thing happened over here. Took the liquidity, failed to close below. By the meantime, the wick retested or revisited or rebalanced this imbalance. So now from here, I'm only looking into buy long, buy long, buy long until this happened. It happened where? The very first fair value of the entire move. When market reached there, it failed to close above that high. So I was expecting this low will be taken. Market took this low on this day, but the same day it failed to close below its previous day's low. Okay, it failed to close below. So from this day's closing, I'm still looking into the higher run. It took the buy side, closed above, took the buy side, closed above. Now here took the buy side, failed to close above. What is the target? The sell side. Took the sell side, failed to close below, again going higher, things like that. Okay, now this one is due. Market came, revisited this daily fair value or the first fair value. This is now a breakaway gap on the daily level, because market never came to revisit this area, and this fair value was partially filled, so it still has unfilled amount over there or area over there. Now market displaced above, created a very small fair value gap. So I will keep an eye on the next week what market does when it retests or revisits this small little fair value. Also, I will keep an eye on where it is closing today. If it fails to close above this high, which is Thursday high, I will consider a pullback to this fair value or revisit to this fair value, and based on the price action I will look into my next setups. Now that's the first point, that what is your higher time frame point of interest. Look into those things first. Once you are done with that, the second question you ask yourself before entering into a trade is, where is it going to go? That means, what is the draw on liquidity? Where is the liquidity sitting? Either it's a rebalance to the imbalance, that's where it is going, or it is going to take a liquidity. So that is the area you target as you enter into a trade. Now number 3, where is it going from? It's very important, guys. You see this swing low, I have nothing over here, but when market was retracing on the hourly level, let me first show you the hourly level. You see where it is retracing from? The only hourly fair value of this move. When this fair value is will be broken, that is where I will look for a sell short setup that gonna take these sell side liquidities. Until it's broken, I'm not willing to take a sell short. Even if I get stopped out by taking a buy long, if I get a setup, of course, around this area I don't have a setup, I can see a liquidity grab, I didn't get a market structure shift with displacement yet. So I'm still looking into a displacement, but where is it going from? From a hourly fair value. This is making sense, just the way this hourly retracement was making sense to me. Okay, here the first time that black candle came, this. Now there is a lot of other things. When you have knowledge, you will understand. Number 1 is, you see this green candle, I have a blue line, it took that buy side liquidity. When this retracement was happening, I was looking into the chart to see if the candle can close below this level or not. If it closes below this level, that can consider, or that can create a change in state of delivery. When market came, retested the fair value, it did not close below that, it immediately went above. On the 15 minutes level also, you will see nothing close below that candle. This high was taken by this candle. On the 15 minutes, the same thing happened. It fall, stopped here, tapped into this hourly fair value, it started going higher. Okay, so nothing close below this specific candle's opening price. This is, if it closed below this, around this area, that can create a possible change in state of delivery. When that didn't happen, I considered this as my inversion fair value. Now look where market the bodies are still. Okay, how many times you got your reaction from this level until it took the buy side. So I considered it even before market was above that level. I considered this will not hold the price because it didn't show me the sign of reversal, with even though the candle is huge. Look at the candle size. These 4 candles, what it did, this one candle almost recovered everything, created a fair value, but I didn't consider that market will respect this and go lower. Why? Because it didn't close below this level. On the hourly, on the 15 minutes, even on the 5 minutes, if I'm not wrong, yeah, so even on the 5 minutes, that's the same candle, nothing closed below. So every time frame is suggesting me that this is not a sell side delivery, this is just a retracement to the imbalance. Okay, and that's exactly what market did here, started going higher. Now this is what I'm saying, where is it going from? Now why I also did not consider a sell short around that area, let me explain that. Later on, when from here, when market came, retested, went above and created this fair value that disrespected, when later on market was coming, it already has taken liquidity until this high. Let me go to 1 minute, let me show you that specific area so that you understand. You see it took the liquidity until this high. Now this is the move. It's not a very like energetic move on the 1 minute chart or even 5 minutes or even 15 minutes, but I still entered into a trade and I got my profit, whatever profit. I entered from this fair value even when market was not above the fair value, the 15 minutes bearish. I entered from this fair value. Now if you look closely here, it left a very clean equal sell side liquidity. But why I still entered into a trade? Muhammad Ali Khan, hey, always some good. Hey brother, how are you? Thanks for joining. I hope you are not sleepy. Thanks a lot and congratulations bro on your success. It's your success. I don't know how much I was able to help you, but whatever it is, it's your hard work. It's the success you got because you didn't give up. Okay, that's the first thing. You didn't give up. If you have given up, you would never know your true potential. Now on your funded account, go with a plan. Like before I was trading with a plan, like my risk to reward ratio and the percentage I'm willing to risk, things like that. But now when I'm trading, I have now multiple funded accounts, so I have a plan. The day I don't follow my plan or I use my plan, that is the day I take most of my, like it goes crazy. I take most of my losses on those days. The plan is like, for me, I'm willing to, like, I'm happy if I can make somewhat around $500 to $600 per account. Since I do copy trade, means when I execute in one account, it copies the same trade all in all my account. So when I'm doing that, $500 or $600 is good enough, because when multiplied by 3 accounts, it will be 1500 or more than that, okay, in a day. So that's a crazy ton of amount. So anyway, even though there is this all credit goes to you and brother, it's all your effort. Okay, you are doing the hard work, that's why you are getting your success. Yeah, maybe I helped, like my videos or my concepts helped a little, but until you learn it properly, no one, even if ICT sits beside me and talks everything when I'm trading, if I didn't put the effort on practicing looking into the chart the way I'm looking, I would never get the success. Now let me finish with this one. Okay, so you see these equal lows over here on the 1 minute time frame. I still considered entering from this fair value. Why? Lot of people will disagree. They will say this is a gamble, this is something that worked out, but it don't work out every time. Let me give you this. Until this candle happened, this low, okay, I was expecting to enter from this specific fair value. Now when market was here and again willing to go higher, I looked into where exactly it is going from. You see this candle's wick. Let me show you the middle point. Look at the tap, this candle's wick. Now there is this volume imbalance as well, you have to keep that in mind as well. But look into this candle's wick. When the middle point was respected, I was waiting for a entry from this fair value, this a small little fair value. I didn't get that. The next candle did the exact same thing. So when these equals were formed, I was still waiting for an entry from this fair value, because I thought market will take these equals, then it will come lower. Next candle expanded higher. So now I was expecting a candle that will close above this and leave a fair value. Next candle closed above by a very dodgy wick, but it left a very beautiful fair value here. That is why I entered from this fair value. Okay, when this candle was formed. Okay, the very next candle also expanded higher. Now when market came here, I saw it, I got my entry, it reacted very beautifully. Now I'm looking into the candles, that how long it stays inside this and how it reacts when it goes above this, because you see it created exact equal around that level. Let me remove this one. So these exact equals are another reason I got more confident about entering here, because these equals will be taken, and by this time if I bring back that, it is tapping the inversion fair values middle point. So yes, I have to take that risk, because it's all about your reading the price action. I was reading it from morning time, like I don't even remember from where, from here, from this area, like to, no, not this, I think from this area I was looking into the price, what it's doing, how it's reacting. So when it came here to revisit this area, I know what exactly I'm looking into. I have everything in my mind mapped. Now it has three, like not three, but very clean equal buy side liquidity. I was waiting to see how market goes above that area. It went above very aggressively, displaced above, created fair value, although I think it came until this level if I'm not wrong. Okay, but it went above the middle point. That was the first thing for me. Okay, yeah, so it came until that. Okay, I'm not gonna name it order block, but it is, because it created that fair value. So anyway, order block level, then it expanded higher up until I got my first partial from that buy side liquidity. I trailed my stop loss around this candle's low or something, I cannot remember, it's in the screenshot, but that's where I got my second partial filled, when market took the liquidity and came lower after taking the partial. Don't worry, this is where I got my partial. Then I got stepped out below this low. Okay, somewhat around this low or this low, I cannot remember exactly, but I have the screenshot. So where is it going from is this. Now same thing, when market was coming lower from here, okay, this, look, when market was coming lower from here, you see this high, it took this liquidity, but there is nothing over here that can send the price lower. So this high does not make any sense. On the other hand, on the 1 minute chart, this high, and the blue line that you can see, they created more strong buy side liquidity. Now I'm waiting for an opportunity. What opportunity? When market came inside of this area, let me check few more candles, because yeah, so when market came inside of this area and broke above this fair value, I think that is where I found my first entry, if I'm not wrong. Yeah, so when it broke above this fair value, it created multiple fair values over there. I was willing to enter from this fair value. Okay, I was willing to enter from this fair value, but why? Because of the midpoint rejection. But unfortunately I didn't get that. Okay, I didn't take that, not get that, I didn't take that. So later on, let it come lower, let it come lower. Okay, where is my entry? That's my entry, exactly the low where market came. After that I targeted this high as my final take profit. All the profits I took from there. Okay, even though market went higher after a short retracement, it even went above this buy side, later on it came lower. Whatever happened, I don't care, as long as I'm like 2200 in each account, guys. Not 200, maybe 2158 or something. I don't care what market is doing. Now what I'm seeing is this high or that high. As I said, there is nothing that can send it back, so my bullish bias is still up to that level. And there is this thing, okay, when market is bullish, London will create the low of the day, or it will create the high of the day, doesn't matter, London creates something like that. Okay, most of the time, not every day. If I go, you see that London, this is the London slow. This is also London session, but this is like the kill zone. Okay, London created the low of the day, New York created the high of the day. Same thing here, created during the kill zone, created the low of the day, New York created high of the day. Created the high of the day, New York created the low of the day until this far. You see this high. Let me take off my indicator and let me just mark this high. I will show you why. See like how clean these liquidities are, how close market reached, it didn't take that liquidity. It created more equals over there, it fell the whole day. Even like you can see the date over here. Okay, that's 6th February. On the 7th February market started going higher and finally took those buy side liquidities. After taking the buy side liquidity, it retraced to the fair value gap, or maybe around, like, I don't know on the higher time frame what is sitting around this area, but this is a higher time frame point of interest. You can be sure about that. It took that liquidity by a little, like a tick or two lower, and then it started expanding higher. Same thing every time, or most of the time, London does this sort of thing. So I trade London, that's why I know how London market can react. In the New York session, I have very few experience, very few. Okay, so when market came, look where it came. Okay, that's the hourly fair value gap. Again, it came here, it expanding higher like this, and you see the market structure, it shifted. Yes, this fair value already gave you the entry here, but I would love to take this entry from this revisit to the fair value. Okay, and maybe I would miss the entry because I would mark this as my inducement. As a result, I would take the entry from the middle point. I might even miss the entry, I don't care. Okay, I want to see these liquidities taken later on, if not after like revisiting this area, or maybe reaching to the 50% of this candle week, this sort of area. When market reaches there, I want to see it's revisiting that low. Whatever it is, I don't trade the New York session, so I have very few experience about that and the price action during the New York, but I keep every day I look into the chart like that. Anyway, so I hope you got the point 3, that where is it going from. So even the retracement, where is it happening from? You see previously this is the area market created the bearish fair value that got respected, market came lower, took all the sell side liquidities. Now market again went back to that area. So this area is a important level that you can keep in your mind. So when you are targeting, you can target the lower portion as your liquidity or take profit target. So it may look simple to you or like very less to you. Let's say like this is the fair value, so the third candle will be here, that's your stop loss. If you want to be conservative, you can put even lower. Let's target this 2.1. so 1 to 2 or 1 is to 2.1. if you are looking into risk to reward, that if you are looking into the ticks or points, that's 46.25, or let's say 46. How much you are getting with that? 46 into 20, this is $920 with one lot, with just one lot. Okay, so you have to be mindful or thoughtful regarding this. Now all I can see here is market created this buy side with this buy side. This is a 1 minute swing high, and I have this candle's middle point as my possible buy side. It's very equal over there, like very relatively equal to each other. So for that I have to look into the 15 minutes point of interest, how it's retracing or how it's looking over on the higher time frame. For me 15 minutes is a good enough time frame. Also inside of the hourly fair value, where did the market came? This was actually, I marked it as my 15 minutes breakaway gap, and I was expecting it will come to the upper portion and then expand higher. This is where exactly it came. Lot of things, guys, lot of things. That's the most extreme possible fair value gap. It's even lower than the OTC that I can possibly draw over here. Okay, so yeah, I mean, I was expecting from this area, see, like the OTC, but since that's the highest it reached with the week, I'm not too worried about that fair value anymore, and I already got what I wanted to get from the market. So yeah, I mean, on the 15 minutes this expansion looks really good. Now depending on where it is coming out from, let's see like if it actually reached the 50% or not. With my MTIs, I don't think it exactly, but very close to that. Okay, so very close to that C on the 15 minutes candle. So yeah, be thoughtful about that. Maybe on the hourly it already reached the 50% level. Yeah, see, so higher time frame, when in doubt zoom out. You see, this is the hourly week. Look where this week is coming from, 50% level. That's why I said like look into the longer weeks, bigger weeks, and rather than going straight for the high, start from the middle. Okay, like the CE of that, because around this area on the lower time frame you will find your order block, you will find your fair value gap, and ICT told to act or respect this middle point as you respect your fair value gaps middle point. I hope you got my point. Like the fair value gaps middle point, we call it CE, consequent encouragement, right? CE. The same way this middle point is called the consequent encouragement. CE is used only these two levels. Okay, like either any gaps, maybe volume imbalance, that is a gap as well, new day opening gap, new week opening gap. Every gap's middle point is the CE, and every week's middle point is the C. On the other hand, mean threshold is for two different type of things, but it should work as the it should work the similar way. Number one is order block, the middle point from the high to low, that's the order block mean threshold. Another thing is breaker block, like I don't know like where I can actually find a proper breaker block to give you the example, but whatever it is, I hope you know the breaker block, but if you don't, so let me just draw. So this is a bearish breaker block, the down close candle with the lowest body from a high low to higher high. This is your bearish breaker block. There can be multiple candles, the whole candle set or set of candles are your breaker block, but the extreme one, the last one, is the most important one. So the middle point of that specific candle, you make that, or you call that the mean threshold. Same way there will be your bearish order block around this area, the last up close candle with highest body, that is responsible for taking like this move, it's responsible for taking the liquidity, then the market structure shift happened. So you will find your order block around this area. Also, for me to become the first thing, the first order block, to become it a order block, I want to see a fair value gap around that area. Okay, like either right after the order block or inside of the range of the order block. If there are multiple candles on the order block level, I want to see inside of that there is a fair value gap, so that can be a high probability order block. So the middle point of the extreme order block, that's your mean threshold. The middle point of your extreme breaker block, that is your mean threshold. So these are the two things only that has the mean threshold. Now where is it going from? That's how you figure it out. If it doesn't make sense, if it hasn't already take your liquidity, you will find later on it will take the liquidity. Now it's coming out from the hourly candles week or CE, but where is it going from? This order block, because after this candle I immediately got a fair value gap, maybe, but I'm not buying that this is the reason market is going higher. Okay, so it's 1 minute candle, I'm still expecting, if market can close on the like at least the 15 minutes level, if it can close above the midpoint of that, only then I will go for a higher run. Other than that, I will see what market does. I will sit, okay, until this specific, or in the 1 minute, wherever the fair value is, that fair value is not broken, I'm not considering anything. That's how I look into the chart. Okay, this is how I trade. Now that's the 3. Now number 4, I will show you. It's a very simple question. What if? By what if, what do I mean is, let's say every calculation, everything you have done, or your strategy, everything is looking perfect, but if it doesn't work, because it's inevitable, you will take a loss no matter what. So whenever, let's say this is a fair value gap that market has created, you are seeing it's respecting the bullish PDRs, whatever it is. Let's say this is your entry, this was your stop loss. What if it doesn't work? How much? This what if will cover a lot of areas. Okay, how much you are willing to take a loss, okay, like take the risk for. If your risk is something that you cannot tolerate, let's say like with one lot I'm getting $350 worth of risk and getting $480, I might not consider a trade from here until that, or even this high that can give me bit more of a reward, but still I might not consider a entry. Why? Because the risk and the reward that I'm getting does not make any sense to me. Okay, when market was trading here, this high or even those highs, it made sense. It's a big area to cover. Okay, let me show you. This is a huge area to cover for that high to reach. Okay, even from here around this area, this is a very good area to cover. Why? Because all I'm seeing is, when I'm entering from this specific candle, my stop loss will be, if not here, my stop loss will be maybe here. This is the area that's giving me with a 90 15.25, so it's like 300 plus with 180 risk. So I'm happy to lose $180, but here I'm getting $350 for one lot of entry. Okay, things similar way, like when I entered from this fair value until this high, when I put or took my first partial from this area, my stop loss was right below that candle. This was the area, if I'm not wrong, or if I kept it below this, I cannot remember where I exactly put, but even if I put here, that's 22 ticks when market will reach here. 22 ticks means $440. How much I'm risking? 9.25, that is $185. So with $185 risk, I'm getting $440 by taking one lots. Now here is the thing, I can take two lots and it's only 370. Now the same 300 that you are seeing here is giving me $880. So this is why this one I'm seeing the value, but this one I'm not seeing the value. And as I said, I have nothing over here that can stop the market, when I have multiple things over here that can send the market lower. I hope you are getting the point. What I mean by the first thing, how much I'm willing to lose. Number 2 is, what if certain things happen when you are already in a trade. Now when I was in this trade, I was looking into everything. You see, like this, I already know that market, when market was like this big of a black candle, let me remove the point, I marked this, and I know, like when I was showing the replay, just go back to my stream, you will understand. When I was showing, I was marking this level because there is volume imbalance. I expected that market can come here, but I wanted to see how quick it leaves that area. It was doing this. So during that specific moment, I had a few things in mind. let me tell you, you won't understand until I go back to my trading plan. Okay, so let me get back to 15 minutes and that specific area. Where was it? Here. You see, when market came here, market was doing like, it was in a little consolidation mode, then it started going higher. But during this consolidation, I was looking into a different thing. The different thing is, you see this line, I will look into this side, the line here. I will just change the color of the line so that you can understand. When market was consolidating, I was just looking into this candle. Okay, this line is the previous candle's high and the middle point of this bearish fair value. All I was looking into is, by the time this candle close, which happened, this is a 15 minutes candle, right? So at a exactly on this candle, this is where the 15 minutes candle closed, 4:49. okay, like this candle opened here, closed here, so this is where the candle closed. I was just waiting to see if, since it's not going higher straight away, I was waiting to see if it can close above that level or not. This is where the 15 minutes candle's final 1 minute candle opened. This is where it closed. So it closed above the previous high and the middle point of this bearish fair value. This is where I got confident that I'm okay with the trade. Now another thing you can see, even though it came to that level with the wick, nothing closed below that fair value gap. So this is another confirmation, and by the end it actually closed above the fair value with a new fair value. I had volume imbalance. I was looking into the fair value, at the same time I was looking into the volume imbalance. The same thing over here. It came to the volume imbalance with wick, but it respected the fair value with body. Immediately after, I was waiting for a big move upside. It gave me the big displacement above the high that it recently created, because look here, when it took the liquidity, this candle did not close above. So I have to consider looking for a exit plan if I don't see a displacement like this immediately within next couple of candles. When this happened, I can consider that this is the liquidity it took. Now market can come revisit all this zigzag. Okay, like there are so many things that market can achieve by coming lower than going higher from this high. Because see, around this area I have this small little fair value, volume imbalance, fair value, then this area, so many things. I'm expecting market to go higher. So the what if is like this: what if it closed or failed to close above this level? Then the next candle's target will be shifted to lower. I will look for an exit plan with as small as whatever it is offering me by entering from this fair value, and by closing somewhat around this area, maybe $20, $50, $100, doesn't matter. I'm willing to exit out of the trade, wait to see what market does on the next candle. The same thing here. You see, like after taking the liquidity, when this happened, I was waiting. When the up move happened, I was waiting. When this happened, I was waiting. How long? Until it reached to my higher time frame point of interest. When this happened, now I'm waiting to see if it's respecting the bullish PDRS or the bearish PDRS. Now when it's respecting the bullish PDRS, it will disrespect the bearish. That's what it's doing on its way up. The 15 minutes fair value, the only fair value, got disrespected. The 1 minute, all the fair value got disrespected. This fair value disrespected. This fair value disrespected. Everything it's disrespecting. What it's respecting is all the bullish. So that's why I'm getting more confident to hold until it at least reaches to that high. When it reached here, I got my first profit, and then I trailed my stop loss. I cannot exactly remember where exactly I trailed my stop loss and got the stop out. but I trailed my stop loss, got stopped out in profit. Now after that I looked into this, that it's not making sense to come from here. The liquidity is higher and there is nothing here that can send the market lower, because even if you look into this huge candle as your order block, it disrespected the mean threshold already multiple times. Let me show you this huge bullish candle, the last up close candle previously. Market closed above, came lower, closed above, came lower. So 2 times it closed above, 1 time it respected, but other times it closed above. So I'm not expecting market to, just because of that market is coming lower. On the other hand, on the 15 minutes time frame, whatever you can draw over here, it already disrespected all of them. So based on multiple things, that's why when I trade I keep my chart like this. Okay, like this is my 15 minutes, this is my 1 minute. I keep it this way, and I keep my ES chart over here and my other ES chart over here, 1 minute. And as you can see, like I have this ES buy side liquidity below, you will see the sell side also here. Okay, this is when I'm trading, I keep it like this just to see why. Now let me tell you that as a around, this is PM session today, where is it? Here. You see, when this high happened, ES took the all-time high, like this high. You see, like the similar high around that area. ES took that high, the highest market reached around this level. ES took that over. Oh shit, where is it? Okay, so ES took that high over here. On the other hand, NQ failed to take, but NQ is more strong on the buy side than the sell side. When ES is the weakest or weaker one that took the liquidity from that high, you have to keep this in mind, that NQ will eventually take that high. All you have to wait or do is wait for the perfect moment or perfect setup. So I was waiting for that. When ES took that high, this high, and NQ is failing miserably, you see, like the first time, the first time market came here, this high here, okay, like this high, it took that high. This is the exact same high that ES has here and here. ES took that high. When ES is the weaker one, NQ failed to take around this area. What does that mean? It made more liquidity. When it retraced, I looked for entry. I didn't take the entry from this specific fair value because that's what I was expecting to do, but later on I took the entry from here. But why I took the entry even though it took that buy side liquidity? Because that moment ES took the highest buy side liquidity that NQ is still willing or waiting to take. And the same thing that I just said here, that it made this equal, like this liquidity more strong, that eventually it will take, that was taken. Now this high did the exact same thing. It made this liquidity more strong. So market when retraced, I looked for a possible area to enter from, and around this area on the 5 minutes, let me go to 5 minutes, I will show you. You see this low, this is the low I'm talking about. Look at this. I will just draw a line from here so that you can see the low here. Okay, you see this is the first fair value that 5 minute created, this is the second fair value, but on the 1 minute, that's the first fair value, that's the second fair value. That's why I disregarded this 5 minutes fair value. I entered from this 1 minute level, from this level, that is the breakaway gap for 5 minutes. Later on, that's the area market retested and went higher, but rather than looking into 5 minutes, I'm looking into the 15 minutes inversion fair value that market created here, because still market is trading higher from that area. It didn't close any body below that. Okay, too many drawings. Let me clean up my chart and let me get back to the normal mode. I don't know how much it helped you, but That's how I look into the chart. Okay, this is my way of trading, and since this is the way I'm improving every day, guys. Okay, this is the way I'm improving every day. So the what if stands for mostly like, what if this happens or this doesn't happen. You have to be either strict with your trade, like I am willing to take the loss, or you can reduce the loss by exiting early. Yes, sometimes you will miss a huge opportunity or huge like a good opportunity, things like that. See, like this is 15 minutes chart. The breakaway gap here, market tapped, market immediately respected. By the meantime, market took this sell side liquidity. It created one fair value here. This is the first fair value. So if it can go above that level, the 50% level that previously got respected on the hourly level, it's now, if it can close above this and go above this with another fair value, that fair value can be a possible area where you can enter from. But you have to keep in mind that market can still come to this fair value. Why? Because when it took the buy side, this black candle, it failed to close above. So you have to keep in mind that now or later market can still come back to this area. Also, I have this BPR over here, the balance price range. Okay, so on the 15 minutes level, so there is nothing impossible for the market to do, but it's good if it can stay around this area, create more liquidities, then come back. It will be a very good, like high probability buy long setup when that happens. If it doesn't go too far around that area, if it can consolidate a little, come lower, so accumulation, manipulation, then the distribution towards the upside. Okay, similar thing around this area. It was mostly the accumulation phase. As you can see, like it was literally this much of the movement. It's going higher, coming lower, going higher, coming lower, but accumulation happened. The whole accumulation sell side been taken. Market is going higher to take the buy side now, because the body, nothing closed above these highs. Okay, like this is the highest and this is the lowest. Everything is in between this range. See this manipulation towards the downside, distribution towards the upside. Let me show you where exactly market came from, the highest to the lowest, the dealing range high to the low. You see that OTZ, that is where market came when that high was formed. This is the OTZ retracement. It took all the accumulation buy side. First it took the sell side, then what is the target? That high is the target. That's what market took. Okay, similarly here I can see the accumulation or reaccumulation. Now it's the redistribution. I'm not saying this is the manipulation. Why? Because market is bullish, bias is bullish. Whatever happened around that. You see all this thing, it created equals, came lower, first took the sell side, then took the buy side, and after taking the buy side, it came back to inside the range. It didn't came back into the OTZ. That's why I'm not considering any entry from here. But around this area, it has done a lot of things, like where you can see the black candles and the green candles, the last leg. This is until where I'm thinking that the market is balanced. Below that I had this fair value. That's the fair value it came, like, sorry, not below, like above that I had this fair value on the 15 minutes level. This is the fair value. That's where market came, and then it started going. So it's not always it gonna come to the OTZ. OTZ is something that I have implemented. I'm not willing to take an entry from this area. Since it didn't came to my OTZ, I'm not willing to do that. But from this swing low to this swing high, if it's around the equilibrium or in the discount level, I might consider on the lower time frame. I don't know, but OTZ is something that I implemented with my strategy. When the dealing range, this is a setup, this is a model, dealing range. OTZ itself is a model or setup. Okay, when market is coming to the OTZ, that's itself is a model or setup, entry model. Now when I'm aligning fair value, dealing range, or even like just the 2022 YT model with the dealing with the OTZ, it's two strategy aligning together. The days I did not look into the OTZ like this, okay, those are the days I'm actually failing or taking more losses, because this is two confluences added together. You enter from either the 6 to level or the 7 on level, depending on what market and how far it usually retraces. If you enter from 6 to level, that one is your stop loss. If on the like on this level you can have a better stop loss level, you can just cheat until that much. For example, from 6 to level, if I enter, okay, like let's say if I enter from here, stop loss will be here, first partial will be at 1, that high. Now this is a very low risk to reward. Same entry, if I can remove or reduce my stop loss, because that's a fair value gap, and this is the third candle, that is where I'm putting. Also the same thing is covering the mean threshold of the order block. So this is, now it's 1.69, this is where I will take my first partial. Just this is the OTZ model that I'm showing, that if I'm using the OTZ itself, this is where either full or first partial. The -27 is the range where I would take the full profit, and for that, let's say I always put it on the 1 and on the -27. This is 2.33. No matter what, if your analysis is correct, if you are getting your price until that far, you will always get this 2.33. But what I saw is this 2.33 is sometimes, or most of the time, it coming very close to that -27.27, and then it's retracing. Maybe it's taking a long time to reach there, or it's retracing completely, things like that. So that is where I reduced it to 1 to 2. Okay, this is how my 1 to 2 came. I have tested a lot of, first I was only taking 1:3 as my profit target, so my win rate was very low. Then I started reducing it by 0.10, okay, so 90, then 80, then even 75. When I reduced it, my win rate improved, but it was not making much sense over there. When I reduced it to 2.5, my win rate improved a little, but still I was having those issues as well. It was very close to my take profit, then it's retracing. But when I reduced it to 1 to 2, this is where I found the most success. How I define the success is, this is the area where my win rate is improving and my overall take profit. Okay, let me give you what I'm saying over here. If it's 1 to 2, okay, 1 to 2, if you have even a 60% win rate, so for every $1 you are getting $2 return. With the 60% win rate, the profit ratio is 120%. The profit you are getting is 120%. Okay, and how many trades you are losing? Out of 100 trade, you are losing 40 trades. So -40 is 80% overall gain after 100% 100 trades. Now the same thing, let me calculate with 2.5. okay, 2.5, 1:2.5. Now your win rate, like for me, my win rate reduced around 50% level. Now 2.5, right? So how much I'm getting? 125%, something like that, 125%. But I'm losing how many trades now? 50 trades. So minus 125 minus 50 is 75. So my win rate is decreasing by 10% and my overall profit is decreasing by 5%. So that's why it's not worth it for me. Same thing with higher, it's reducing the win rate. That's gonna happen for sure. it will reduce the win rate and the total overall profit. So this is the thing that is giving me a huge PNL. Okay, huge. Just look how beautifully it's trading above, it's displacing above. Now it did not come here, but I'm still willing to keep an eye here. But this is the fair value I might consider entering if I had any reference level over here. Since I don't have anything, this is why I'm ignoring or skipping this part of the trading, because today is Friday. When it gonna fall and create the wick, it gonna fall like crazy. Like you can write it down, it gonna fall the last end, the PM session, it gonna fall like crazy. Okay, you will not even get chance to hit your stop loss properly when it gonna fall, because the PM session it gonna create the wick. Now from the 10 to 11, this is the silver bullet. Let's see what happened around that area in 1 minute. This is 10, this is 11. Okay, so market came below this inducement, took the liquidity. I can consider this or this as my break of the structure on its way up. Let me check the mean threshold respect, order block opening price respect. Why I'm considering this as the order block? It traded back into the previous level of liquidity, and this proportion block also, when market went above, it created a fair value. Simple. When market went above this specific high, okay, why this high is because this 3 candle is all of my order block, and this is the high of those 3 consecutive candles. If there was no green candle here, then I had to wait until market closed above this high. So when it closed above that, the order block got confirmed, and this is where it created the fair value. That's the order block mean threshold, that's the order block's opening price, or the level that I call order block. Okay, even though it's starting from here, this is the extreme. It retested or respected that, gave you a break of a structure over here if you didn't consider entering from this fair value or the order block level after seeing the rejection or reaction multiple times. If you didn't consider that, then first fair value, second fair value, it didn't come until that far, it retraced from here. So I don't really know if I could have got any entry from this specific move or not, but whatever it is, silver bullet is this far. Okay, so it's still inside the silver bullet, so it can even come back for the 15 minutes retest, fair value retest, and that moment you can get maybe a sell short setup for your silver bullet. Anyway, I'd never traded, like I barely traded this session. So what if is that? And the final thing, as I was saying, I don't know where it now went, too many drawings on the chart. Where is my questions? Yeah, now this is the final and the most important. What is the game plan? Okay, what you are planning regarding your trading. Okay, it's not about how much you can make, you have to keep that in mind. Trading is about how you can protect the money you have made or the profit you have made. Let me give you an example. Let me bring back my chart one more time. Okay, not this one, hold on, because this one is just today's PNL. Okay, I was willing to take this small loss because I know that if the opportunity I'm getting, if I'm correct about this retracement, I will make a huge amount of return out of this $220. If I'm wrong about this, it's only $220 regarding of what profit I made. Okay, that's why you can see it's 81% win, only one trade here. Okay, one trade, things like that, but it's the partials that it's showing. I don't know like how they calculate these things, but one trade $220, it's not two trades. I don't trade $10 from a 100k account. That's the first thing. Okay, whatever the stop loss allowed me, when I saw that even if I take the entry with 2 contracts, the stop loss is only requiring, like if I'm wrong around that level, I'm wrong, so that only required $220. I took 2 contract and with that stop loss. I hit the stop loss, it's okay. I waited until I got the opportunity, I took that chance. This is how much profit I made. As simple as that. It's not 3 trades, 4, 5 trades. It's all, I don't know how they calculate it. Anyway, it's just a simple thing over there. But what I wanted to show you guys, let me find it out. This PNL curve I showed at the very beginning of the streaming. You see the money I have from this one single account after taking this, okay, this the very starting of the trading, I had $1,200 negative balance. Okay, so my account went negative balance when I got my express funded account credential. Look at the curve after that. Okay, yeah, in between you can see something this, but am I not growing? Then I have withdrawn a big amount, again it started going higher like this. So this is how much I made from one single account so far. Okay, so far, and withdraw some account amount as well. Now I'm willing to keep some for me. I'm game plan. What do I mean by that? Let's say when I first withdraw, like requested my withdraw, my PNL was nearly 1218k or like $12,800, something like that, like 12k plus. Okay, I requested only around 4k. I left 8k over there because I wanted to make sure that the next withdrawal I don't need to target like 1k or 600 700 per day. I can just make a day with 200 plus profit 5 times, then I can withdraw more money. Although the days went good, that's why it went up to 18k, but whatever it is, from 8k to 80, because in one day I made around in one trade I made around 7.5k. so that's the day. After that I just made the bare minimum just to secure my profit from this specific account that I just showed. Now I didn't, few days ago I request another withdrawal. I didn't withdraw my 50%. I always have a plan to keep some money in my hand or in my account so that I can at least take some losses. I'm willing to take the losses. Now there is another thing. You have heard about the scaling plan. Let me give you that top step scaling plan. This might be the most searched item. You see on the 100k account, okay, that's too much. On the 100k accounts, my account balance needs to be above 3000 to get the max lot. Okay, max lot size. Why I want to keep it like that? The day I made 7.5k, I didn't even hold the trade until my buy side was taken. Okay, or until my liquidity level was taken. I took partial along the way. I took a entry of 6 lots. Now if my balance was at 3000 or below 3000, I wouldn't take, like I was unable to take 6 lot, right? But I kept my balance above, that's why I had the max allocation. Even there were so many places where I could add more positions until it reaches to the max lot size. I didn't add because when 6 lot, it's a big amount. Okay, so 6 lot, so every lot gave me over 1k, nearly 1.2k, 3k, 1.23k. okay, so 1200 1300 per lot that I got, but that's the average that I got. I took partial on my way. When a certain liquidity level is reached, I closed half of the position straight away. When it reached to the other liquidity level, I closed 2 lots. Then the final lot I trailed until a certain level, I closed it. I didn't even wait until that. Yes, it's a mistake, but it's not a mistake in other way. When I'm talking about the game plan, why it's not a mistake, I need to build a portfolio for myself first, where I can have my own money sitting around. Okay, I'm not like my funded account, if it goes to zero, it will be closed. I cannot go to zero anymore. That's the first thing. Now I'm building the capital. When I will have enough capital in each account, I will not copy trade. Like I will not copy all the trades in the same like same trade won't be copied in all accounts all across. I will take one account at a time. I will make them in separate categories. One is for the bread and butter, that's what ICT likes to call it, which is one is for the money that I need to survive in this world, or whatever you can say, although I have a job, but I'm saying this is also where I'm spending time, right? So I have to take it that way. So that's how I'm gonna keep one account. The other account will be strategy playlist. Okay, let me other will be aggressive, one will be aggressive, one will be conservative, things like that. Okay, I hope you got my point. I'm sorry I didn't read a lot of comments, so let me read the comments now. Hi brother, in the ICT strategy playlist it was just 15 minutes high time frame and 1 minute entry. Earlier you explained about many different time frame. Is this teaching different from that? Okay, Praveen Sharma, you have to watch that video one more time, brother. On that silver bullet, I said I mostly look into that, but when I pointed out the things, I clearly said if there is nothing clearly visible, or if you are not sure about the direction or the liquidities on the 15 minutes, you can go to 1 hour or higher time frame, to your choice. I said, and I wrote it also where the levels are. Now Neil Jadab, hi brother, do you trade only silver bullet on NQ? Not really, bro. I don't just trade silver bullet, I trade London session only, you can say that, but whenever I'm getting a setup inside my London session, I trade that. Okay, so not just the silver bullet, but silver bullet is the thing that I used previously to get myself funded. My friends got funded regarding those things, and few other people are still finding. Even I think if Ali is still here, or Faisal, I think his nickname is Faisal, brother, if you're here, he also I think got value out of the silver bullet strategy. He lives in Australia too, so I think London is the session he will be trading most of the time, if I'm not wrong, or New York. So yeah, I trade London session, not just the silver bullet, but silver bullet is something where, like, from when I sit on my chart, that's the thing. Maybe like 3 a.m. it is the silver bullet, so I sit on my chart at around 2:45, or if I have nothing to do, I would love to sit early to see what price is doing, so maybe 2:30 or something New York time. So in my time, in Australian time, now it's around 6:30 to 6:45, something around this time I sit on the chart. From 7 my silver bullet start in Australian time, and that is the moment I look for my setups. Before that, I just look how market is reacting from a certain level, what it is doing, and what it has done so far. That's what I look. Okay, so I hope that answers your question. Now let me check the next. Faisal Khan, I just took a trade upside from the fair value and made 6. Good, bro. I think whatever it is, brother, please create a game plan for me. As I said, now I have a game plan that I'm solely focusing on, just because I was like pretty confident about the market move or structure during my London session. I took multiple entries. Other than that, even like yesterday I was trading with my like I was trading and my brother was watching me on Discord. He came join me to see how I look into the chart. My elder brother, okay, my own brother. So that's my personal, don't ask for the Discord. I haven't think about it. If I can find good people who are actually practicing things, who have some knowledge. I will try to build a community with those people so that they can share their thoughts on the market, discuss with each other, get help. Okay, but for now I don't really have that much time to manage a Discord channel and things like that. Okay, I have a job, I am trading as well, I am working on my own software project, a lot of things, guys. I barely get time to sleep, so please do not ask for that. However, yeah, so he was looking into that. I had so many opportunities, but I ended my day with 900 something in profit, because my overall target was something around $600, because that will give me 12,000 a month if I can make 600. Okay, and that's just my one account. Okay, now I have 3 accounts, that will be $36,000 a month, but I have some plus and minus over there. Anyway, so but the liquidity, the most obvious liquidity level, that level gave me 900. I took the 900, as simple as that. Now Ali, okay, Pavin Sharma, Muhammad Ali, do you only use 15 minutes and 1 minute 20? Follow exactly what my brother's teacher on that on. Okay, made 400 in London and now 600. Okay, that's my best idea. Okay, brother, beautiful. And go slow, make sure you are getting your first payout, and with that money, I know, like, I'm not a financial advisor, I studied computer science, so I have no idea how the financial things works, but as I said on the Facebook community post, that I'm trying to fry fish with the fish oil. Okay, so what do I mean by that is, with my first 50k funded account, the withdrawal I got, I considered my trading view membership, I considered my challenge purchase, I considered my express funded account fees, the $149 whatever, everything as my investment, and the time as my investment. I withdraw a amount that will allow me to get back all the investment and some profit. So when I got everything in my pocket, and remember, when you first request the withdrawal, they will return you the challenge amount. Okay, so for 50k, if you paid $49, you will get that $49 US dollar back. For 100k, if you pay 99 US dollar, you will get that back. Every time you complete a challenge, you can request a withdrawal from that account. They will refund or return you the money that you spend on that challenge. Okay, that's every time. So every account that I have completed and I have requested withdraw from, I got the challenge amount back, not the express funded fee, which is the $149, not that one. So yeah, what I was saying is, when I requested the withdrawal, I kept aside all the money that I have invested and thought that I should give myself as a what it calls as a salary or something. I kept that aside. With the extra money or the profit, I immediately went for a 100k account. Okay, and there was a promotion as well, so I didn't really need to pay 99 US dollars. I paid something around 48 or 53 US dollars, something like that. I had a promotion during that time, like a promo code. So I bought another account, I completed that. That's the 100k you are seeing right now. All the PNLs that I'm showing, it's from that promotional discounted challenge that I got, and from that I'm making most of the money. Okay, now I have a like recently bought a 100k account, wanted to make a series regarding that, but I'm not gonna, like, I honestly speaking, I will not get the time, so I'm not gonna do that. However, I have a plan to close my 50k account once this new 100k challenge is completed. Why I bought another 100k rather than buying 150k is because 100k is a very good amount or round figure that I can actually calculate the risk percentage. Let's say, like, I'm risking $500, that's 0.5% per trade. I'm risking $300, that's 0.3%. but same thing when I'm risking 300 on a 150k account, now I know it's less than 0.3%, of my balance, but I don't know exactly how much I'm risking. So this calculation when I'm doing, it's giving me headache. So even though I have a 150k funded express funded account, I'm treating that as my 100k. That's why I'm copy trading all over. Okay, even my 50k I'm treating as a 100k account, because all together I have now like 300k as funded from Top Step. So I'm treating all together it's like 300k accounts. So I'm willing to take off my 50k by taking all the profit out once I complete the 100k challenge. Okay, so later on I will have 150k account and 200k accounts. That's my game plan for now. Later I don't know what I will do, but yes, I will diversify, because my first experience was very bad, guys. Like when I was learning ICT strategies and things like that, I was too eager to learn it with my real money, so that the same time I can consider my psychology, everything. Like I bought a challenge, only 5k challenge, okay, don't get me wrong, from my forex fund. That 5k challenge I was just about to pass, then I found some influences around me, like similar, that person was also trading ICT concept or ICT strategies ideas using those things. So I thought, okay, if I sit with him I can get more information and even more confirmation regarding the entries. But what I did was, instead of following my thing, I followed him. As a result, below the 5k account, okay, on the my forex fund MFF, that is no longer available. Then I bought a 10k account, same thing. The days I traded alone, I got very good amount of profits. The days I sat with that person, I lost all my profit. Eventually ended with blowing the 10k account from my forex fund. Then I bought a 20k account, and don't forget, like by this time I'm also growing, right? I'm building my strategy, I'm testing, and I'm actually matching or trying to revisit his ideas, why those trades didn't work. Okay, so these sort of things help me a lot. Now on the 20k account, my first stage was completed, my second stage completed, and by $100 profit. Okay, phase 1 completed, phase 2 I had 100 something dollars in profit. I went to sleep around, I don't know, like midnight sometime I went to sleep. The next day when I came, the chart is not moving, man. I don't know what happened. Okay, I was looking, I was trying to log out, reconnect the MetaTrader 5. Okay, it's not moving. Now in my MetaTrader 5, if I can find the login details, I will show you guys the account balance over there as well some other time. The chart was not moving, so I got like, what the hell is going on? I logged out, I did this, I did that, a lot of things, nothing is working. Then I thought maybe server update or MetaTrader. I started looking for the results. Still the still the my forex fund website was not taken down, it was still working. I logged into that as well. Then later that day I thought, okay, it's okay, I will not trade. Later that day when I looked into YouTube and other Facebook communities, I found the news and I was like, F me. Okay, like this was the moment I was about to feel the success. Like I don't know how to forget that memory, guys. That was my first successful failure. So from that I have in mind that no matter what, how good the industry is, how good their facilities are, how good their services are, I'm not gonna base or rely on one single prop firm. So even though Top Step so far is like, my experience is unbelievable, like I cannot even explain this. Every time I knock into the support, if I need any information, like when I was buying the new 100k challenge, I knocked them that can I do this. They said yes, you can have 3 express funded and 1 live account, but when you are not in a live account you cannot have 4 express funded. So still I'm doing this challenge because of 2 reasons. Number 1 is I'm willing to complete it very slowly, like whatever profit I'm making here, that will be the profit there as well. Okay, so if you guys want to see, let me just take a tab to the other area and let me show you my new express funded one. Okay, like how I'm trading. Just give me a second. Give me a second to bring that P&L. Okay, I should actually log into TraderPath since it didn't update the today's P&L yet. Let me just bring it from TraderPath. I'll show you guys like what's the balance looking like right now and the profit of today. So Sonnet, yep. Okay, there today is changed, so yesterday. See this is the 82, this the exact 26.95 220. This is the Sonnet, okay, the challenge. So the current balance on the challenge is $3,507. Okay, so I am taking it very slowly, very slowly. The exact same thing, it's I'm copying over there. Okay, this is the exact same PNL that I just showed you today. All this is the commission and a trade that made me lose $220 over here, 120 and 100. I don't know why it's showing in 2 candles or 2 bar chart. And this is the trade after I took, and this was the trade before I took this loss. So one here, one losing trade. That's why it's like that. Okay, but I don't know why it's showing that way. Okay, but this is the new challenge account. Today's PNL is $2,108.64 on this account too, and altogether it's at 3,500. So what I'm trying to say here is I'm trying to go it slowly. By the meantime, I believe my 100k will be moved to live account. Okay, because it's like next week I will be done with my 30 days of, if I can make next week as my profitable week, the next week I will be done with my 30 days of 200 plus profitable day, whatever you know, like whoever is funded, you know, the margin or line, and they have already sent me the mail that they are impressed with my trading, so they are thinking about moving it to things like that. Okay, I already shared it with you guys on the Twitter as well. If you have missed it, you can visit my Twitter, it's ProTraderPath. However, yeah, that's my plan. But if I don't get by next week, I will still have 1 month to pay for the express funded account credential, which is $149. I will have 1 month to do that and another 1 month to take my first trade. So I will have 2 months, and by then I'm pretty confident that if not, like, okay, I cannot have multiple, so my 100k or 150k one of those accounts will be moved to the express funded, okay, live account. Once that's done, I can pay for this one and start trading on this one as well. So there will be 4 accounts altogether, and the total balance will be around 450k, something like that. Anyway, so that's the thing. What I'm saying here is have a game plan. Whatever you are planning, how much money you are happy with by making every day or every trade or whatever, every session, however you count it, do it, maybe weekly or monthly. Keep a target, be flexible with it, because you will hit losses, you will take or miss good opportunities, a lot of things gonna happen during these days. So how you can cope up with those things, it's all about experience. The longer you stay in the field, the better you grow. But think about this, that if you are done with good enough profit, even though there are opportunities, don't trade. Okay, why I'm saying don't trade is because you see, like this hourly fair value or whatever I have drawn over there, the 15 minutes breakaway gap, if I'm not wrong about this one, it holded the price. I'm seeing like this fair value is holding and sending price higher. Again, the order block that I draw, the mean threshold, the order block holded the price. Lot of things happened. Okay, the bullish PDRs are holding the price. I didn't, even though it's happening, I'm not talking about the price action, I'm talking about this and what I have done, what my experience so far has offered me to improve or learn. I'm talking about this. I'm not too concerned about what's happening here, because I'm done with my day, man. 2100 plus in each account, including the new combine that I have taken. So just think about it, 4 accounts, $2100 each. Why the hell I need to consider here? Okay, so I hope you will have a game plan. Now the game plan here will be fry the fish with the fish oil. Okay, this is my plan, I'm sharing with you guys. I'm taking partials or withdrawals from the top step. I'm buying another challenge. Now I had, like, to be honest, the best time with my forex fund. If that company was here, I might have went for the highest possible challenge over there and work on there, because they have so many options to trade with, so many. My best entry model was double break of a structure, which is, let's say this is the buy side liquidity market took from the higher or lower time frame. My entry model was, it broke this structure, gave you the market structure shift, maybe it can retest to the fair value or even to the order block level. When this level is broken, I look for the entry from this area, and this sort of entry gave me, like, during those moments, think like with a 20k account I was risking 1%, which is $200 per trade. Okay, and on that my forex fund I had 8% total drawdown. Okay, 8 or 10%, I forgot, but something around that, not like top step 3% or 6%, it's even more. So I was risking only $200, and if you go to my channel you will see me like the very first trade execution video I have uploaded, that was from the my forex fund account. With $200 risk I made over nearly 1200 or 1147, something like that, on that one single trade. Okay, so that was more than 5, like around, if I'm not wrong, the risk to reward was something around 8.7 or something. Okay, even more, I forgot the exact amount, but whatever I risked I got something like that. This model happens very few times. Okay, you will see, like on this sort of market, what happens is when market broke this structure, see this fair value, it didn't came here, so you didn't get your entry. Now it created a propulsion block, or maybe there is no fair value except for this one, since the chart is very small. But liquidity, market structure shift, or you can consider here the market structure shift, this is your break of a structure. Now you have your fair value here and here, you have a fair value here too, but from this low to that high, these are the fair values you are looking into entering into a trade most likely. Okay, like from this to this is your discounted fair value. So this is why I'm saying you are looking into a trade from these two fair values rather than from this, because you don't know if market will retrace or reverse from here or not. But this is area, let's say like your entry is from this fair value, this area. Where should be your stop loss? Here. There is another reason for market to come lower. So here, now you are taking 26.75 ticks or handles as your loss. This is with one lot $520 and 0.75 is another $15, so $535. On the other hand, the same entry if you can get from here, this is only 15 lots, this is $300. What makes more sense to you? If this middle point of this 1 minute fair value 1 minute candles wick that reacted and sent the market lower is the reason for market to come lower, this CE is something that ICT said treat this as you treat your fair value gaps middle point. So this week's middle point you have to treat like that. So this is a reason or valid reason for market to come lower. So on this retracement you cannot enter from here, even though you are seeing market. Look how market went above those areas. Not a single candle with a proper body, it's all the wicks and a small little body. Finally it gave you something around this area, but here the whole move doesn't have a single fair value. From this until this there is this a small little fair value, until that there is not a single fair value. So how do you know this fair value gonna hold the price? On the other hand, this low, although it's coming out from here, I'm not trusting this as a order block to hold. Why I'm not counting this? Look into the mean threshold. You count this as your mean threshold when the body or the opening of the candle is here. How can your mean threshold be here? Yes, in this case you are seeing that market didn't close below that middle point, but how can you trust when the opening is here? How can you trust this to hold the price and act as order block? I'm not trusting that. You can trust that, I don't trust that. Okay, why I said this is the order block? You see this low that previously came into the middle point of this week's CE. Okay, why I'm marking this candle or this CE you don't have here. Okay, like this black candle, there is no more black candle, the only black candle. The midpoint, you see the candles above, these two candles didn't create anything like that. This fair value didn't hold it. So the next point to hold the price is this black candle CE. That's what it hold and sent higher. When this swing low, okay, this is a clean low that you can see over here. This is a swing low for me. It's a swing low for anyone who knows how to mark the swing low. When this liquidity was taken, market went higher above this internal structure that I can call as my market structure shift, since there is a green candle sitting around this area. That's why I'm saying this is my market structure shift. But my change in state of delivery happened when this candle, this green candle, closed above that opening price, because this is the candle responsible for taking this liquidity taken. Market gave you the market structure shift or even change in state of delivery over here. When this green candle closed this area above this yellow line of that high, this is where your order block got retested, confirmed. When the order block got confirmed, it created a fair value. That's the number 2 rules to be considered as the order block, this fair value. It doesn't, price doesn't need to respect this. Okay, I'm talking about order block, forget about the fair value, but I want to see a fair value. When market, see the low, high, lower low, this green candle is your breaker, this candle, this is where market came. So your level of defense is this, the order block itself that's aligning with that, and when market broke above that high, it created a fair value. So these 3 candles are eligible for becoming my order block. You can see the bodies, nothing closed below this opening price. Even if it closes, I don't mind as long as it doesn't close below the mean threshold. Now for a high probability order block, you will see move like this. It will come maximum once to the mean threshold, immediately you will find your reaction. When it closed above that order block level, like the extreme order block level, when this candle closed above that, it will not come to revisit that area. If the price has to go higher, it will not revisit that order block mean threshold. This is the high probability one I'm talking about. So when market revisited that mean threshold for 1, later on the upper portion of the order block got retested twice, and then this is the displacement you are seeing. You have a fair value here, fair value here, fair value here. How many fair values after it left that area? So that's why I'm saying this is my high probability. I have so many things here for the price to, like, how the level of defenses. First thing is the fair value gap, then I have from this level, okay, the upper portion of the fair value, from the middle lower portion of the fair value, my order block starts, my breaker steps, and then I have the mean threshold. So when market what it calls disrespected the fair value, only then I'm looking into how it reacting into this area. Before that, this is where I'm entering. Is even though if I'm entering from here, my stop loss has to be either below the order block mean threshold, like significantly below, or you see this fair value gap. If the fair value gap candle can cover your mean threshold, that can be a possible area where you can put, if not the swing low. Okay, I'm saying the most calculative conservative way of putting a stop loss. This is your stop loss. Look, market came very close to your stop loss. Did it hit your stop loss? No, because that stop loss covers your order block as well, but I'm not willing to put it here because I can see a little volume imbalance over there. So for that reason, I might put at least around the middle point of this week. Although I'm expecting market will respect the mean threshold, I'm putting it because of that volume imbalance. If there was no volume imbalance, I would still consider putting here. Simple. And if you want to be like more obvious, or everyone's more what it calls logical area, is the swing low. Okay, that's the liquidity. This is itself is a restriction for the market, because this part can act as a, like, let me show you, this part can act as a rejection block on the lower time frame. Maybe this part can act as a rejection, so price can come inside of this area, then reject higher. You will see this sort of things in, like, when this, see, like, the liquidity taken, market structure shift is happening, there is fair value gap, a lot of things. So maybe I don't know this is the rejection block or not, because I have to look into other things as well. But when market will come around this area, it can reject from this area very easily. This sort of things you might find previously happened, maybe here. Okay, you see, like, when market traded lower, it came until this body and the volume imbalance, it started going lower. I mean, this is not a good example. I'm just saying, why I'm saying this is I'm not looking into the chart to enter from here. If I didn't enter from this fair value or this order block level after seeing the rejection from mean threshold and this sort of reaction, then I might not will, or I'm not willing to enter into a trade at all. Whatever happens in the market, let it happen. So yeah, have a game plan that includes your strategy, how you want to build your wallet or your balance or your account, whatever, like everything you have to plan. For me, I have planned to buy the FTMOs, maybe whatever, I don't know what's their highest amount is. If it's 250k, that's the challenge I'm willing to buy next from FTMO. Skill funded traders, they are, so far they have good reviews, but I'm not too sure about going there straight away, because you know, skill funded traders, the founders, they are like ICT's top students, like Paladin, then Umar, then Word of Wisdom, I think Rizwan, yeah, all those people. Even recently I saw like Jetcap or Kyle, what's his name, on the ICT's channel. You will find them, their interviews on the ICT's channel as well. So those people. But there is a thing, guys, I previously said that I was a support resistance trader. I don't just consider that ICT is the only way or whatever it is. It's a very unique thing. Lot of things are unique, don't get me wrong, but when I trade, I have so many things in mind. Okay, like whatever I'm trying to teach you guys, like when I look into the daily candle, like where it closed, if it closed above, then the high it created, that will be the target, things like that. When I was talking about this sort of things, I didn't get it from ICT. Okay, it's something I got by my own, because when I was looking into the chart, I found it. It's not something that came in 1 year or 2 years. The crypto trading I started was back in 2014, man. But that moment, it was not trade, it was kind of investment. So I skipped all those years. In 2018 was where I took things seriously, because the portfolio I made, if I hold the portfolio, I could make a huge, like shit ton of money. Okay, if I just hold it for bit longer. But I took a very small profit with all my assets that I had. I sold them all with very small profit. I was happy with the profit, but it was a necessity as well, because whatever savings I had, I invested. And then when it was time for me to, like when I was in need of that money, I had to sell it anyway. But when I saw that the opportunity I missed is because I have less knowledge about those things, that is where I started looking into things more seriously. Okay, so even though I'm looking into ICT, I'm looking into lot of other things. Okay, go to ICT's channel, his videos, lot of videos I know, but scroll all the way to the area where he took the interviews of his students. Okay, this see, I saw those as well. Okay, why I see this is because, watch him, this guy is the highest ever, how to put it together, like he took the highest ever payouts in the history of prop firm. One single person over 1.3 million dollars. If you don't know, you know now, and you will see ICT even posted and tweeted on his YouTube as well regarding him. Okay, this Kyle, go to his name is Jetcap on the social media, or I don't know like how Kyle is the real name or Jade is the real name, I don't know, but that's how he goes. Look into this interview. These two are the most successful among the others. Then there is this Ali Khan. He's usually from Pakistan, but I think he is currently living in US or UK, something like that. Okay, and the way he talks, I don't know, like the accent is from Pakistan or UK or something. Okay, but don't get me wrong, I mean, he sounds bit funny to me, the way he talks, but I love it. Okay, I watched every single shorts he has uploaded. Now what he's saying in everything, look into the title, eye training drill. Okay, so the model he's sharing, it's the exact same thing, the bullish and bearish, exact same thing, just like different days, different pairs, the exact same way he's sharing it. Okay, so this is, if you don't know Ali Khan, this is Ali Khan who took ICT, like who took the private mentorship from ICT, like in-person mentorship. ICT gave it to very few people. This is one of them, Kyle and Paladin. These were the people during those moments. Okay, so he is one of the co-founder of that STF, what it calls, skill funded STF. Okay, STF, still skill funded traders. So yeah, I mean, have a plan, diversify your wallet, so that if anything unusual or unexpected like my forex fund happens, you can still have your source going and you have no regret. Okay, and this is why I'm actually cashing out every week. Other than that, I had intention to go to the top leaderboard with the balance. Okay, on the top step I had the intention to go with the balance. Now what I'm seeing recently, a guy named Anonymous, okay, he hide your name, hide his name, and he is the highest PNL holder right now. Yesterday's live still, guys, listen, I have nothing to do with these lives. Just look, every day I'm watching it, okay, every day. It's 7 hours worth of live stream. Now sometimes I'm not watching because I'm not feeling like it, but look, most of the time even I'm watching how these people are trading, okay, it didn't come like that. I don't know, like how helpful the things are. Now, as I said, my first mentor was this guy. There are a lot of controversies. This guy has 2.4 million. Look, his every videos 12 days ago, 3 weeks ago, I at least watched until the main points, okay, like lot of videos I have watched in my life, okay. It didn't just come from, this is a support resistance trader, and the way he trades, it's almost the same thing that ICT is teaching us, okay. It's either the rejection block he is using, or the break of a structure and the breaker block or fair value gap retest. That is what he is using without even realizing it, but that's how he is trading. This is where I started my journey with, in terms of learning. Then I bought some books. I still have those books in my shelf behind me. I bought the Trading in the Zone, although I didn't finish it because I found the YouTube video with the summarization or main points, and I found the summarization or main points of that book. I wrote like, I didn't manage the time, okay, don't get me wrong, I didn't find the time to finish that book, but I have intention to finish it. That's why I'm still carrying those books around, okay. The MXMM trader, this is market maker model, only 2 videos, finished it. Now I had so many, okay. This is Jetcap, this is his YouTube channel, the one I was talking about. He was like putting it before, but he recently started making some videos. 13 days ago he made a video. I watched it completely, but I don't know why it's until this far. Maybe I was saying something. I watched few of his videos because I recently found his channel. Now this is another guy, Kimmel Trading. He also trades ICT concept, but I'm looking into his videos for different things. Like he gave Alpha Capital Group a honest review recently. He made a this one, like prop firm award. I watched the complete video to know which prop firms have the like best user friendly interface plus other stuff like trust, less trust issue, things like that, okay. So I still watch his videos, but mostly it's not because of the lessons or learnings from him, but it's mostly like some news on different things, okay. When my forex fund had the issues, he was the guy who first came up with the whole analysis and the case study, everything. So that's when I subscribed this guy. I still watch little bit of his videos. Now Fair Value God is a guy, he is pretty good. Honestly, like I watched couple of his videos so far, but I follow him on the Twitter, that's why I subscribed him here, okay. But his videos are very small and most of these are on his Twitter. I follow him on Twitter, Fair Value God. This guy shared very good insights on Twitter, okay. Let me give you the Twitter. Fair Value God. This is Kaspar, my friend Nahidur. Okay, it's very hard to find. This is Jetcap, okay, like his Twitter. I follow him as well. I follow very few people on Twitter. Like, let me go from my followers so that no, so following. So Jetcap, that's my friend Ken Hawk. Like we together are building a software for ourselves. Fair Value God here, okay. This guy, this is my friend AK Paladin, Fair Value God, Triton, Inner Circle, and this is my brother. I don't know how he has more followers than me, but he is following 1400 people, when I'm following only 10 people. Okay, so it's good. Anyway, fair value god, as I was saying, he has so many good insights over here. I don't know like if I would be able to show you here or not, but if you follow this guy you will find few good informations. If you don't want to, don't worry. Okay, and this is my Twitter. If you guys want to follow me, you can find at ProTraderPath. This is the Twitter. This is where I have shared my brother Faisal Khan's success, then my own success, other people who previously sent me some of my PNLs, like 150k challenge, guys. I completed it in 3 days, like 4.4k in one day, 4.1k in one day, and the final day I made another 1500 or something like that. Okay, lot of days are like that. Every challenge so far I have completed, I completed in 3 days. Okay, 50k, 100k, 150k, whatever, every challenge completed in 3 days. Only this 100k I'm taking it slow, just because I don't have time to go each account and select it individually. Whatever I'm taking as my profit, I'm making that much on the challenge as well. So yeah, I mean, if you want, you can follow me here, although I rarely post, but I post. Okay, now create that plan, diversify your wallet so that anything like my forex fund, if ever happens, I hope, I wish it never happens, but if anything like that happens, you will not regret losing all the funded accounts from one area. Okay, because you will have other funded accounts from where you can actually continue trading, and at the same time I'm withdrawing almost every single week, because like after today I can already request a huge payout from my account. Not all of them, but I think one of my account, if I'm not wrong. So I'm going to request that money on Saturday 10 a.m. after 10 a.m. because today is Friday. On Saturday 10 a.m. Australian time, the dashboard will be updated, and after that I will be able to request the withdrawal. I will be withdrawing that. I had no intention doing it this way or going this way, but after what happened with my forex fund, I'm not willing to risk all my profits. Okay, that's why I'm paying something for myself. Once I get the money, I can use that money to buy another prop from challenge from a different prop firm that are still functioning. Okay, so anything like that unusual happens anytime, I will not be heartbroken, or I will not be like out of my opportunities. That's why I'm continuously withdrawing money. But when I'm withdrawing, I'm making sure that I have enough money left on that account, so that if I take, let's say like I will take 3 days or 2 days in a row losing trades. Okay, in those days, if I even lose 1% or 2% per day, I will still have something to trade with and come back from. Okay, that's why I'm leaving some good amount over there every time. Okay, and when you are doing it, make sure you're not overdoing it. At least consider the scaling plan in your mind, so that if you have the buying power, you can get or make money with that. Okay, if you don't have the buying power, you have a 50k account or 100k account or 150k account, but your scaling plan is allowing you to take only 2 lots or 3 lots. But when, as you saw, like when I was showing something like this, okay, here if I entered from even this order block level, thinking that this will hold, and this is the buy side. Okay, I'm not saying I'm going to go higher. Maybe I will take some partial here and leave some partial runner for this side. That's the max I will do, but that's where I will take the partial or for whole profit if it's giving me a good risk to reward. This is 3.46. now with 2 lots I'm risking only $370, which on a 100k account 0.37%. I can take 3 lots. Okay, this is a problem. When I click into this value, it doesn't change anymore automatically. Now even with 4 lots, the risk is $740. It's less than 1%. So when I'm confident about a setup, I can take more than 2 lots or 3 lots. This is why you need the buying power. At the same time, it's actually inside my limit. 1% if I'm willing to risk per trade, even with 5 lots, it's not going to 1% or going above 1%. So this is something that I'm willing to like risk. Okay, and what I can do, I can take 5 lots at this high. Okay, even at 1 to 2, whatever, like at this side, the high it just created, that's 1.2. I can reduce at least 2 or 3 lots. This is giving me, let's say I close 2 lots at this high, it's giving me 1000, is it, let me check on last time, if I close 2 lots over there. Okay, $780 in profit. Now the total risk I took over here was 925 or something with 5 lots. By closing 2 lots, I'm reducing the risk by $370 less. Okay, so now it's going around $550 or something. And by taking it, even if it comes lower and hits my stop loss, now I will still have around $250 in profit. So when you have the higher buying power, you have the opportunity to grab more profit, and buy just, see, like just 1 to 2 from this to this, it can give me $1900 worth of profit. And if I go here, it's even more, things like that. Okay guys, I don't know, like it's completely your choice, but I'm giving you this based on my analysis or based on my experience. Okay, see, like it's, as I said, it didn't create anything here to hold the price. So as a result, when market reached to a high, it created, like it took the liquidity for the last time. This is the perfect 2022 IT model for a sell short. Now here are your clean swing lows. You can close some partial around this area, move your stop loss to break even if you actually entered from either this fair value or this fair value, because after the break of a structure, that's the first, that's the second, nothing above. Okay, so either you can enter from here or you can enter from here. Now if you are asking me where would you enter, simple, come from this way, mark the OTZ, that's the fair value aligning, I would disregard that, simple. So this is where I would enter. Stop loss, now that -27, look, from the fair value low, even if I enter from here, as I said, this, that -27 until this low, or that -27 to, it should be little more because I, okay, here 2.33 to 2.35 depending on a tick higher or lower wherever you are entering. This is the risk to reward you are always getting, and this is the reason I don't target 1 to 3, 1 to 4, things like that anymore, because I don't want to be in a move when it already has taken some liquidity, came to a proportion block or whatever it is. I don't care, I don't even care about this. I'm not saying this is the entry you should take or something, but what I'm saying here is looking into the chart, waiting for the moment is the key. Okay, and since I haven't looked into the higher time frame, let me have a look. Okay, there is this higher time frame or 15 minutes fair value that currently holding the price. However, I have another one below that as well, so maybe I would look for a retracement until this fair value rather than that. So for that I need a market closing below this low, because that will consider the change in state of delivery. You see this high, that liquidity was taken by this candle, so if market can close below this low, that is where the change in state of delivery happened. But I'm not getting the point of market coming here, so let me check in hourly. Okay, it's just in the form of creating that fair value on the hourly chart. So anyway, it doesn't matter, as long as it's not closing below it, this fair value is still holding the price. and once it close below this specific level, even if it can close with displacement, that is when you should look for a sell side delivery. Simple. Okay, I don't need it anymore because tomorrow it will be a new day or new starting. So I hope whatever I'm showing or saying is making sense to you guys. If not, I'm sorry for wasting your time on last time. 5 questions to ask. What is the higher time frame bias? Where is it going to go? Like what is the drawn liquidity? Or on the higher time frame bias, you can see it's on the like rebalancing the imbalance as well. Okay, like on the daily level. Let me show you. During these days, the only thing I was expecting from this low to that highest it reached, you see the OTG, this is where the first fair value also on the daily level is. Okay, so I was expecting market to come until this one, not by taking this liquidity it can go higher or any of this candle will stop the market. I was expecting it to come until this far. So this is internal liquidity grab, rebalancing the imbalance. And ICT, if you have watched his video multiple times, or if you have watched any of his videos regarding this sort of drawn liquidity, even the recent video he was talking about it, if you have watched the recent one he uploaded, market usually goes from internal to external. When market took this, it needs a specific area to retrace. This is the breakaway gap. Okay, why I'm saying this is the breakaway gap? If market keeps a portion unfilled, that is a breakaway gap. You see this lower portion, very little bit of the wick it didn't cover at all, and nothing closed even inside. So this is the daily breakaway gap. Also from this low to that high, first fair value, second fair value. So these are the areas I usually keep an eye on, but since my OTG was aligning with this, I was little like I was confident that it gonna come until that far. Okay, because that's what I'm seeing every time. When market retested that, I was even on this day, if you watch my, I don't know, like what is these days, 5th January 2024 on the New York Times. So on my YouTube channel, that might be 6th January, which is Saturday. If you can find the live stream, look when I was talking during this area, market was literally this black and trading here. I said if it can close above this level, okay, like this previous day's low, if it can close above, from that day I'm bullish. It closed above here, so the next day my target was this high, if not higher. I mean, this was the target. Closed above, this was the target. Closed above, this was the target for this day. Okay, like the next day. Now when market was coming higher, I even talked about that before market reached here. Why? From this high to this low, I said in my OTG I will see where it comes. I'm not expecting market to react from this lower portion of the fair value or even the 25% or even any other place. Only the portion that is aligning with my OTG, I'm expecting a reaction around that area. So when market went there, yes, it went to the first fair value one more time. The same thing here, it went there, it did that. I'm still bullish, but as I said, I was looking into the daily levels that market closed. You see, the final time it took the buy side liquidity, it failed to close above. So what is the next, my way of looking into the liquidity is this sell side. And if market doesn't take it the next day, I mark it as the due sell side liquidity. So I mark it like this, daily due SSO. Okay, this is how I marked it. Inside candle the next day took the sell side, failed to close below, but remember there is a due. Okay, so market took the liquidity, failed to close below. So now I have this buy side as my due buy side liquidity, but since I'm bullish. I'm expecting market will take the sell side first, then it will take the buy side. Exactly, that's what it did. It took the sell side from here, and the previous day with this candle it took it. When it was taking the sell side, I was on the sell side. I made a very good amount of profit on that day, and I said in by the end of the day I want to see market if it can close above this sell side liquidity or not. This, okay, not this one, this the previous day. When that happened, this is where I shifted my bias towards the buy side, and you see all these relative daily levels. It took all of them with one candle, closed above the fair value that was previously holding for a short moment, closed above that, and it went there. Now let me come to another thing. Okay, let me go to my profile one last time before I leave. I have retweeted, I don't know when, sorry guys about the mouse wheel noise. This is a gaming mouse, so it mechanical thing makes noise, you have to take that. So many people guys, so many people. This is another younger brother of mine who got funded a long ago. I shared that, my things, my achievements, lot of things. But here 15th November 2023, I like, this is the repost or post, I don't know, but this is where around 2023 15th November, although I was anticipating those levels earlier, I don't know what happened to my internet. So come on, load. Why it's that hard? This is ES, okay, E-mini S&P ES 500. You see where price currently is like 500 45.12 something. I don't know if you are able to see this or not, but I said, see, due by side, weekly and daily due by side, I marked like that. I said mark those levels and lock it on your trading view. It won't go straight there, we all know that, but that's where price is heading. Where, when did I say it? December, sorry, not December, November 15, 2023. ES 500, what was the highest price over there? 4,910. Okay, let me go to the ES chart. What is the current price or the high? $5,043. Okay, but I called it in November. How? I calculated every due liquidities, okay, on the daily level, on the weekly level, and marked all those. And as I said, market never leaves anything due, never. So on the weekly level, whatever it is due, or on the daily level, whatever it is due on the sell side, after this bullish move, it's coming guys, don't worry, it's coming, it will come. Okay, we all know, history suggests that even though market is going like high like this, you see the falls, when the fall comes, it comes like this, it comes like this. This is a daily chart, okay, it comes like this, then it comes like this, it's going higher, it closed all time high, all the buy sides it had, everything done. Now anytime, like I don't know how long it gonna take, but whenever I see that, simple daily level is what I'm following. As long as it's giving me the daily bias towards the buy side, I'm going buy side. The day it gonna give me the bias on the sell side, I'm going sell side until it reaches a imbalance or a liquidity level. Okay, if I see this imbalance is like price is respecting this daily imbalance and then again going higher or giving me the buy side drawn liquidity, the way I mark it, that way I'm going buy long again from this fair value. If I'm seeing that when market came inside of the fair value, it's not giving me the bullish bias or the buy side liquidity is my due liquidity, instead the sell side is due, I will look for more sell shorts. As long as it's giving me, I'm gonna look like that way. This is the chart that you have in front of you, you can go and see how many times that works. Okay, that one single thing, how many times that works. What was that? If it closes below the sell side, the next day the previous day's sell side will be the drawn liquidity, or that's the way market will go first. Market will take that liquidity. Now here you can see, like, as why I'm saying market never leaves anything due. You see this area, market here took the buy side liquidity, failed to close above. Now this sell side of the target, this, even though it's a green candle, it took the sell side liquidity, it failed to close below. So this buy side of the target, I'm marking the buy side. On the next day it took again the sell side liquidity, failed to close below. But look what I said, I'm looking into long positions because my market is saying long is a better option. What is the opening price and the body over here? This size. Look at the wick on the bottom side, how big of this wick is. So if you find a long setup around this level, because you have a daily level of volume imbalance sitting right here, okay, if you found that this is a bigger option to enter into a trade than this, okay, forget about that. Maybe you didn't take the entry, you lost it. Okay, this day it took the liquidity, failed to close above. Now this is my due liquidity. On the next day market gave me a sell side delivery. Now I know that I'm not looking into longs around this area because it has taken the liquidities, it's coming from the fair value gaps. Its target is this, because these areas are also due for the market. Now here market took the liquidity, close below, took the liquidity, close below, took the liquidity, close below. Every time it's happening, it's going lower. This is the liquidity target, it took the liquidity, failed to close below. This high is due, market leaving those dues, right? So now when market is going here around this area, this sell side of the due sell side, okay, if you don't know what I mean, this was the due sell side, this was the due sell side, these two. So it first it's coming for the due sell side to be cleared, now it's going ahead to the buy side delivery or buy side due to be cleared. Why this is due? Whatever happened up there, I'm not counting from here, just look here. Price took the sell side, closed below, took the sell side, closed below. So this sell side was due, market didn't take the sell side, it went higher. Same thing here, buy side taken, failed to close above. Now this sell side taken, due, taken, due, taken, close below, due. So this sell side was due, market went higher, market came, cleared those two sell sides, it didn't came for this because nothing here is due. You see here, took the liquidity, failed to close below. So this sell side is not due, instead what is due? This buy side. Now this buy side was taken here with a tick, failed to close above. What is due? This sell side. This candle took the sell side, failed to close below. What is due? That buy side. Took the buy side, closed above. Again buy side taken, failed to close above. This is due. The next day sell side taken, failed to close, buy side taken, closed above. What is due? This buy side, closed, took the buy side, failed. What is due? This. Next day took the sell side, failed to close below. Now what is due? This buy side, market took the sell side, again failed to close below. What is due? This buy side and this buy side is due. This is the move you are getting when there are multiple dues. Same thing over here, when this was due, this was the move. When due was cleared, this is the move. Now market goes from internal, this is internal, right? Where is the external? That is the external. From this low until that high, this is the external low, this is the external low. All these lows are internal liquidities. So from internal, it retested a daily breakaway gap or bullish fair value gap. It revisited or rebalanced that, took the liquidity, started going higher. From this day I said, when this candle was happening, I said I'm looking for a buy side delivery from this area. Go to my friend's channel, ask him. Okay, this is where I'm looking into buy side until the external is taken. Now I have no bias. That's why I'm happy with whatever profit I'm making from my London session. I'm not looking into any more trades because above this I have no reference point. Around this area I had reference point. I made 500 6.5k 7k this sort of money in a day. When I have no reference above this area, I'm making based on the daily drawn liquidity. Whenever the daily, just look into the chart, man. Everywhere you look, you will find this. Okay, closed above, close, failed to close. Next day, this sell side of the target. Market came. Now, how I use this? Remember, opening price where, like, let's say. Let me draw the candle. Okay, how I look into this. Let's say this is where market previously took the liquidity, closed above, created a wick. This is the wick. Okay, on the top side, since it's a bullish candle, I'm looking into the buy side only. Okay, this is my way of looking into the candles. This bullish candle, this is the price where it closed previously. So this is the opening price for the next day. It can create a gap above or higher, I don't care, but wherever the next day opens, let's say next day opened here, okay, created a gap. To enter into a long position, you can see like this to this, targeting from this to this is not a very good level, or it look a very small area to you. But the way you have to enter is when market, let's say it created a gap, opened here, market can go higher, you do nothing. Market can come here, you do nothing. When market comes below the opening price around this area, this is where you look for your higher time frame point of interest. So this is a daily candle, you look into hourly or 15 minutes, that if you have anything here to send price higher or not. If you have multiple relative equal or equal lows around this area, this is where you look for that liquidity rate first. Below that you will have your point of interest. When market taps into that point of interest on the 15 minutes or hourly, from daily I'm just looking into the drawn liquidity and the opening. Okay, and we all know the opening, we can mark it easily. So I'm looking into that. When the higher time frame, means 15 minutes or hourly point of interest is met around this area, this is where on the lower time frame, whatever time frame you are trading, me 1 minute, 2 minute, 3 minute, doesn't matter. Okay, whatever time frame, on that specific time frame you want to see this happening. So this is the liquidity market structure. Retest to a fair value, order block, breaker block, whatever you have mastered, this is where you enter and then target that. So on the lower time frame, this level will look like a 7 or 8 hour trade. You don't even need to target all the way up to this liquidity. You can target something around this level, and that will give you more than thousands of dollars as your profit. Okay, this is why I have less losing trades. Simple. Keep it simple, be simple. As long as you know how to enter or how to mechanically use those things, you will find it. Look, every place, man, it's closing above, next day closing above, next day this. Took the liquidity from, it went higher, right? It failed to what? Close above. Now this sell side, same thing continuous going on. Whatever due it's leaving, later on it's clearing that due. Same thing here. Okay, whatever due it had, look from this specific day, took the buy side liquidity, failed to close above. What? This sell side was the target. What I want to see, from this opening price, market is going higher, then giving me the W or the M pattern. You see this liquidity graph, then the market structure shift on the lower time frame. I hope you are understanding this part. Okay, this is what happening here. When that is happening, this is where I'm looking for an entry for this sell side. Market came, took the sell side, closed below. What is the next day's target? This sell side. but overall market is bullish. It's going for those external and those due liquidities. Okay, so what market did is market took the sell side liquidity first. Go to this day, any time frame, maybe 15 minutes, hourly, wherever you are able to see the low. Look, it first took the sell side. When it took the sell side, then it expanded higher. However, you found your sell side delivery, maybe you took a loss, you didn't find the proper setup, you will take losses. Okay, it's inevitable. If you don't understand how market gonna move, you will take losses, as simple as that. But it took the sell side liquidity, failed to close below. Instead, what it did, it took the buy side as well, closed above. From here, where am I going? Higher. This day took the liquidity, failed. Market created a fair value or something, I don't know, whatever. This sell side was due. Market never came to this area, but market went higher. Now this sell side is due, and I'm seeing something other around this area is due, this area is due. So it's keeping so many dues so that it can come lower. Now on the sell side day it's due, you maybe took another loss. Where was it? Here. But this day you took another loss. It expanded this high, took the buy side, failed to close above. Still, see, the sell side was taken. Took the sell side, failed to close below. Buy side was taken, didn't take the sell side, black candle. Now failed to close. Now this is another due. Again it closed above. This was the due. Next day inside candle, the very next day, this is where market took the buy side liquidity, failed to close above. What is due? This sell side is also due. So there are lots, not this one, this one. So there are lots of sell side around this area that are due, that market is willing to keep, because the external liquidity was not taken until that move. Okay, so once it's taken, now we are looking and waiting for the day when it reverses. Those are the days I'm gonna mark the sell side that are dues. For now I'm looking into only the buy side, and if I'm not wrong, this was the external that market just has finished taking. Okay, and that buy side, this one was not due, but this one was due. Okay, this, and this one was the weekly due or something, if I'm not wrong. No, so that one was not due, this one was due. The buy side liquidity on the weekly and the daily level from this high, and that's where market took the liquidity, then gave you some consolidation. Again it's taking the all-time high, creating all-time high. I believe later on it gonna come lower for to clear all the dues. Okay, like now I don't know when that later one gonna happen. I'm just looking into the daily level, how many times it works, how many times it doesn't work. If you know your model, if you know your setup, you will know how many times it works. Even the days the candle color is different, with the week it gave you the setup. Once you do it on a daily basis, this is where you will not need a lot of influences in terms of taking into like getting a profitable trade. Okay, because you are practicing or you are seeing the chart the same way every single day. So when I'm looking into the daily level this way on the 15 minutes, I don't really need to go too far to the weekly or something. When I go to weekly is, as I said, on the daily when market was retracing, where is it, like, oh, this is, yes, that's why it's not making sense. NQ on the daily when market was coming to this fair value, I said this is my OTZ or the extreme fair value, the fair value that aligns with my OTZ. If this fair value fails to hold, only then I will look into the weekly fair value below that, because if that fair value, this one, when market came around this area, okay, so if that fails, below that I have only sell side liquidity. and that sell side liquidity will be taken, and weekly whatever fair value I have over there or here, wherever it is, that will be my target. Okay, so I think I'm talking about the wrong area. This was the daily breakaway gap, the green color one. So as I was saying, if it fails to hold the price on the weekly level, I will look into the weekly fair value that aligns with my OTC from this low to this high. This was the retracement. Okay, so see this fair value, I would wait to for the price to come until this part. Okay, but the daily hold the price and sent it beautifully higher. That's why I didn't need to look into that weekly fair value anymore. Daily is the most, like I give the priority to the daily level the most. Okay, weekly, yes, I visit when, let's say, like you see this week of the candle on the daily level, there is, I think, okay, there is still a fair value gap, so maybe not a good example, but I was about to say like there is nothing. I was thinking about this retracement, but yeah, still there is a fair value on the daily level, but that same fair value aligns with that weekly level as well. So it's a good influence to have a look like that, but I don't really need a monthly fair value, a weekly fair value, a this and that, so many things around the chart. Because why this bearish weekly fair value is not something you are looking into? Why after this big week you are still expecting a higher run and that buys? I was expecting, I don't know, lot of people was not expecting maybe, but I was expecting, and when I saw this week was happening and then the retracement, it gave me even more confidence, because it's now creating more relative equals around this area rather than going for these sell side liquidities with this move. Okay, so I was more confident that market is going higher. So let's see, like eventually when we get the move towards the downside, but as I said, market never leaves anything due. If you go to your ES1 or NQ1, look around this area, there is nothing due around this area. That's why market never thought of revisiting that area. Okay, it's going higher, it had due over here, you see, like let me show you here. See, like where the body closed, let me show one more time. Like look at the body where it closed. Okay, below, so this sell side was due, this sell side, market came from that high all the way to that sell side. Now similar thing you will find, if I'm not wrong, somewhat around here there was another one, but I cannot, like I don't, oh, this is a weekly level. On the daily level, the similar thing we had around this area. How far back I'm right now? Okay, here, this daily sell side was due. Okay, like this one, I don't know if this is the right, why it's not marking. Okay, and this one was due too, if I'm not wrong. Let me check. No, that was not due. This one was due, came very close to it because of the week. I guess it's a huge week, so the middle point of the week can be a possible area of reversal. So let's see. Yeah, so it came until the closing price, it didn't go quite lower than that. So I don't know, like if it's still due or not, ICT can tell you the best about that one, but for me it's still due now and they are relative equal, but it's a area where it's impossible for the market to retrace by now. Like from where it is, it's quite impossible unless there is a global financial crisis. These relative equals, whatever it is on the daily level, I don't believe it will be taken anytime soon. Like as a trader we won't be able to see that. Okay, but this sell side is due, that can be a possible target for market later on, because this sort of movement can happen and after going higher it can again come and grab this liquidity. This is now a external liquidity, this is now external. Market is taking all the external, it will come take the internals. When it takes this on, there are volume imbalances, weekly level fair value gaps, lot of other things sitting right around this area. It can retrace there, then go higher. Okay, so that's a long story and long time, but as I said, I'm looking into chart on the daily levels mostly. Weekly level once in a week, or just a glance for a week, maybe on Saturday or Sunday. Like today is the last day of the week, so I will have a look where the market closed, if it created any fair value around this area. Since I can already see there is no fair value here and it's already coming up of a fair value, I want to see that on the weekly level if it closed above this line and how far above this line. This is the high. I want to see how far it displaced above that line so that it can continue even higher. And this is the previous week's high. I want to see how far it, like if it closed above or not, so that next week I can still go for longs. And that's the weekly bias, okay, for the entire week. On the daily, I'll just look into where it's closing. On the daily level, same thing, like whatever the all-time high is, how far it is going above that. In this case, this is the, let me remove all, let me make the chart bit bigger. So in this case, this is the high that market is displacing above, so I want to see how far it can displace. It has created a fair value over here, a small but a fair value on the daily level, and if it can close above this level or not by the end of today, like it's 12 p.m. by 5 p.m. or whatever the end of the day, if it can stay above that, I'm still bullish on Monday, and the days it close above, I'm bullish, continuous bullishness, okay. Until it fails to close above its previous day. For example, if today market can come lower than this and close below this level, I'm going for a bearish run of this fair value gap and this liquidity on the daily level. Okay, so on the daily level, this is the liquidity. Let me go to hourly. That looks like this low. On the 15 minutes, this looks like all these relative equals, whatever you can see, accumulation phase and the manipulation phase, these things. Okay, so depending on the close, it's the most important thing. I hope, hey OIO, how are you, man? I think you are new to the channel. Yeah, I think you guys, I have shared it, this specific way of looking into the drawn liquidity on my very first streaming and on the very first video of this channel, where I made the channel like the video about candles. I said if you understand the candle properly, this is where your 50% or more than 50% of your trading is done. Okay, and that's the way I understand the candle. Every time, even on the 15 minutes level, I look into those sort of things. Okay, when I'm in a trade, I look into those. So as I said, when market was retracing the hourly fair value here and going higher, or maybe I'm looking into the wrong area here, when it was doing this, every time the candle is closing above, I'm holding my trade. I'm looking until it reaches that level. Okay, the moment it started to fail to close above, that is where I'm exiting out of my trade. It retraced, I took the position back again from the inversion fair value. When I got the setup, every time it's closing above, this is a inside candle, it didn't take the sell side, it didn't take the buy side. So inside candle, I don't bother, I want to see what the next candle is doing. So first candle closing above, second candle here, that is the liquidity level. Inside candle, the very say like third candle closed above the previous candle and even that high, so it is going higher. That's how I'm looking into the thing. Okay, the moment it's failing, that is where see, like this high was taken with this candle. Although it's a huge week, market kept that due liquidity. When market came lower, it revisited that breakaway gap of 15 minutes. Okay, from the internal, these are the internal liquidities, right? And that is the external, outside liquidity. This is the inside liquidity of a move. Market took the internal liquidity, revisited that fair value. Eventually, where did it went? Above that high and closed and displaced above. Still price is trading above. Now, I don't believe market will stay higher or go too far higher during the PM session because it's Friday, so I'm expecting a lower run. I don't know how far it gonna come low, but a lower run in the PM session so that the weekly wick of the candle can be created on top. This can be the wick and the rest can be a consolidation like what happened around this area, similar thing. I don't know, but I don't care about what PM session is doing. Before Monday, I will just have a look on the weekly level, on the daily level, where market closed and what it left behind. Done with my daily or weekly bias. Okay. Monday, I'm starting my trading from the London session. Whatever my draw on liquidity or the daily bias or weekly bias is telling me, that's the way I'm looking for my setup. Okay. So yeah, I mean, if was the London silver bullet setup today? Was there a London silver bullet setup, Praveen Sharma or dealing range? Let me see. I'm sorry, Praveen, if I missed your comment. I talk a lot, I know, and this is after such long time that I'm talking. So this area, if you are talking about this, I'm looking into the chart in a very different way, my brother, nowadays, because it's trading above the all-time high. I have nothing as my reference point on the left. Okay, and it is doing so many peculiar things. Let me take off this just a sec. Buy side, sell side. I'm just marking the kill zone buy side, sell side, so that it's easier for me. Okay, now how many times have you got your setup on the during the silver bullet? Let's talk about that first. On the previous day, before today. Okay, this is the previous day. The Asia session buy side was taken during silver bullet, the sell side delivery that took all these equal lows. You got that. On this day it didn't happen. Why? Because when market was trading around this area, you see this, it has already taken the sell side from the previous low. It traded into this huge wick and water block candles, I think the 50% level if I'm not wrong, since I have a fair value. It traded even below that, lower than that, so I'm not counting that week, the fair value itself. It's trading the higher time frame point of interest. Right before the silver bullet around this area, market is still revisiting that specific fair value. Now let me get back to 1 minute where I first took my entry was even before the silver bullet, my very first entry. I'll give you the entry as well, like show you the entry. Am I marking too far? Okay, here. Let me come to the 2 AM and then the 3 AM. Yeah. So this is the 15 minutes fair value gap, or yeah, 15 minutes fair value gap. Market was creating that fair value during that moment, okay, on the 15 minutes. But during the creation or creating that fair value, this is 3 AM silver bullet. I took my entry even before the silver bullet. I'm seeing market this way, okay, liquidity, market structure, just for this specific area. I didn't enter here, okay, I did not enter here. When these equals were left behind, I was looking into this specific candle. I saw, yes, it's water block. There is this area where the volume imbalance happened. Market came into that, you see, like this body, that's exactly like the volume imbalance started from here until here. So this volume imbalance is where market came twice. It's going higher. I entered from this specific retracement, this retracement I entered from here. This volume imbalance was my entry, okay. From here I'm in a trade. I held it until it went above that area. and came and like I took a partial around this level, if not somewhat around this level, okay, because it's already trading and trending above that area. I'm seeing too much in profit. I took a partial. I didn't took based on 1 to 2 or the drawn liquidity. I just took it around this area. I cannot remember exactly. I saw when the silver bullet started, market is like this is the 3 AM candle right on the silver bullet. What is this? This should act as a breakaway gap, okay. I think about it this way. I thought this is the first fair value. I missed a thing over there because of this bloody line that you can see. The exact same thing I had on my chart. I missed another thing. I thought this is the first fair value, this is the second fair value. I didn't consider entering into a trade from this fair value, but since I trade on my trade of it because of the copy trader, I put my stop loss. I wanted to put it below the middle point, like around this area, my stop loss. But on the trade of it, my I don't know how I can show you guys, but let me actually try on turning on my camera so that. So you see that screen. I don't know how clean you can see it, but this screen is splitted into 2 parts. So my trade of it chart is very small on the lower portion, and the other display that I have over here I use for either my Discord or my OBS to record the thing, or for the DXY, depending on how I'm utilizing this area. Now I'll just turn off my webcam because my face is too ugly to show to you guys. Anyway, my stop loss on the trade of it I had to put based on my assumption that yes, I'm on the right area. Yes, I could have done another thing, like I looked into the right side. I could look here and select the value or look into the value and then put it there. I didn't do it that way, but after this specific candle, now I'm doing it that way. Okay, I'm looking into the value here and putting my stop loss from trade of it. When I put it, it was just here, okay, this low. Let me actually bring you that video if I have it. Just a second. I will tell you why I entered and why I was willing to hold, but let me see. Oh, this is not the one. 15 minutes on minute. What is this? Is this already the retracement or after? Market okay. Covering the not expect keeping few sees from the close this way down. Okay, so that's why I'm here, not guys. Willing to hold. You see, I have already my for me. What willing to see what my see my entry point. See what market does. Let me bring it little back and let me show you. So this is 2 lots. I'm already seeing 900 order filled, okay, and it's way above. So I closed half of the position now. All time. So I'm gonna but yeah, close. This see where my stop loss is on the trade of it. This is where my stop loss is. Now you can say why you didn't move it lower when you can see it here. The problem is if I move from trading view 1 tick, I have to go to each single account to move the stop loss from that manually. So I had the option to cancel the stop loss, trailing stop loss, or keep it the way it is, okay, rather than going for 4 different accounts and changing it there. Look where market came and stopped. Yes, I know I could have. Okay, I'll try to slow it down. Like, wait a second. Look at the value, okay. Look at the value. It's 17,892, okay, 892. Remember that. Oh damn it! Did I deleted my chart or what? No, here. let me remove this, this low 7892. Do you remember? Look, what is the price over here? Exact 7892. That's where. Now what I missed over here, what I missed is market left a fair value here, a fair value here, although this fair value is mostly I'm considering as volume imbalance, but this is the breakaway gap and this is the fair value gap that market should come and retest, not that. This why from this swing low to that high, look where the discount is. That fair value is above the discount. OTZ, look where the OTZ is. Now when I'm entering into a trade, I'm looking like this. So when I'm trailing, I'm not looking like that way. I didn't anticipated the smaller fair value here, and I didn't anticipated market to come after this huge move all the way, like this huge and this huge, all the way to the middle. That's why I wanted to put just below the middle, around a tick or two below. But as I said, on the trade of it, I have to do it by assumption, okay, by calculation, looking into the chart, and the chart is very small. It's like this on the trade of it. So when I put the stop loss, it was right around that area, and my good luck is exactly where my stop loss was. That's the level where market came and stopped me with that one lot. But you saw my entry was here. Now from here until when I took the partial, I got a good amount of profit, like around $500 partial over there. When it came and stopped me here, still I got another good amount of profit over there. So I have no problem accepting that. But yes, when it stopped by the tick, I didn't I didn't like that thing. I waited the whole move towards the upside. Okay, I didn't do nothing here, I didn't do nothing here. When this happened, I marked this low as my inducement liquidity, because I got stopped out here. I'm willing to enter into a trade if market can come lower and give me a setup. When market came here on the 15 minutes level, I have literally nothing. See, on this low I have nothing here, or this low. If I'm, let me check the time. Yes, this is 4:15. So this low I have nothing here. The only thing I had is this huge fair value and the 1 minute level. Look where the body closed. Okay, you see the wick came lower until this, but the body, look where it closed, inside of that 15 minutes. Now the wick was not making sense to me around this area. So what I did was I looked into the hourly, and I found that the retracement that happened was exactly on the hourly fair value gap, which was, where is it, here, this black candles wick, and this is the only hourly fair value. Like, let me remove everything now and let me show you this. Okay, this 4 p.m. candle, sorry, 4 a.m. candle, this week even came to the exact same fair value. Now in 1 minute, let me get back and let me show you one last time what I was talking about here. So when that was respected and price eventually closed inside of that 15 minutes fair value that I just removed, and remember the fair value that I missed, that was supposed to hold the price or breakaway gap, I was saying, look where the price closed. This is where it closed. Now I considered this as my market structure shift, but since there is nothing to enter, as I said, this fair value was where I was looking into the entry. I didn't get that entry. Instead what I got was market rejecting from here. Now during the silver bullet, what I said is, if market takes the Asia's buy side, you will look for a sell side. Okay, and targeting 1 to 2. Can you see any setup around this area? When market in 1 minute, after taking all the liquidities, going to a new all-time high, it gave you a break of a structure here. it created this fair value here. Now you did not consider entering from here. Remember, this is still inside of your let me mark. That's your 4 p.m. the end of silver bullet. This is still inside of your silver bullet. If I didn't say you enter from here, but if you entered from here, where is your stop loss? Just you guys tell me where is the stop loss should be. The fair value gap candles high. Let's see if you are stopped out or not. That high. 1 2 3 candle created fair value. That's the candle's high. You got your market structure shift with displacement and fair value. What did I tell you about the target? Either the draw on liquidity or 1 to 2. You got your 1 to 2. Yeah, it went very close to your stop loss. Are you stopped out? No. You got your setup, but you have to look for these things. Okay, but on a bullish day, I'm expecting market to create all-time high again today. That's why I didn't consider a sell short entry, and also for the whole day I'm looking how it's reacting to the bullish areas. That's why I didn't consider this. But what I said, did it deliver that? And before even that, I'm already in a good amount of profit. So I'm not considering this sell side, this area. But if I considered, did I got my profit here? Yes. Where is the only liquidity you can see? Like this is the low it created, and other than that, this is the low it created. I'm not saying you can target this, since it's a huge wick. Either you target something around this area, like this sort of area, or if you are very eager to go even lower and take the low hanging fruits, that middle point is the max you can target. Although one single candle went all the way lower, but that's the setup I said to look for. Okay, inside of your silver bullet, your entry happened inside of your silver bullet. Especially if you didn't find your entry on this candle, you got this many times to enter from the exact same until it broke above and gave you a short heart attack. You found your setup, it delivered 1 to 2 sell side liquidity, whatever you clearly get closer. Now it didn't went all the way low to take the Asia session. Why you have to target that for? Aren't you happy with what you are getting here? With one lot you can get $400, and by risking only $135. With two lots, okay, now it's multiply. So $270 risk, you are getting $800. If you are trading from a 50k account, that's not even 0.5% of the risk. Okay, I hope that's making sense. If you are even trading with 50k account, 2% is 270. That's like 1% is $500. So that's like 0.5% risk. You are getting $800. If you are trading, okay, come on, I don't know why they are not fixing this thing, but if I touch this price, when I change it, it doesn't recalculate automatically. With 3 lots, $405 risk, $1200 profit. I mean, how much do you need to make in a day? More than that from a 50k account. By risking $300-400, you need $10,000. Good luck finding that every day. Okay, this is why I said 1 to 2 without any hassle, anything. Just look, you don't even need to look into these two green candles. After that short heart attack, straight away, like all the black candles came to your profit. After that, it started showing some sort of possibility of reversal or retracement. Then the big move happened after the silver bullet closed or finished. But after that, when market came at your entry level or something, from here it's consistent black candles until it hit 1 to 2, then it gave you this. So you had everything I told you. You didn't look into it because maybe either you don't have enough experience, or this is the, like, with all this bullish move you ignored that something. I don't know, like what expectation, how you practiced it, or what you are looking into that certain moment, but 3 to 4, whenever I'm getting my setup, I'm willing to take that setup. But for the whole day I'm looking into this, that's why I intentionally ignored this setup. Okay, this sell short, I ignored it. You are seeing this after it retested and gave you another black candle from the respect. Okay, you are seeing this now, you are not seeing this before. That's why you cannot say that this fair value is where I cannot take the entry. After the market structure shift, you found your displacement on the lower time frame, right? You set this on your chart. Now when you are in your trade, then you are having that heart attack. Okay, this is the short-term heart attack. But did it give you the profit? 1 to 2? Yes. Even if you had closed some partial and targeted this low, or even the hourly fair value, whatever, like you have to have a area from where market can reverse. Okay, either hourly fair value, or you can maybe looked into this fair value that previously market respected, or below that there is this small little fair value, whatever. There was a 15 minutes fair value around this area, so you have to keep that in mind, that market can reverse from that higher time frame point of interest. So I have to take either more partial around that area or close the entire area over there if the profit is good enough. That's how far market came. Okay, this is 4.22. now I'm not saying you can target until this, because even if I took that entry, I would maximum go for that 15 minutes fair value or the 1 to 2, something like that, because market is bullish. I'm not willing to take a sell short on a day when, like, one a week or month where market is this bullish. But I hope this is Varindarman brother Discord, it's my personal brother. It's like I use it for my brother or my close ones that are associated and willing to get some information from me. I don't even trade with them or sit with them. Okay, I just use the Discord for my personal purpose. I don't leave it there, or like I didn't disclose the Discord server or anything. I don't invite anyone. It's I have only 3 people over there: my own brother, my 2 of my cousins. That's it. No one else. So whenever I will be planning regarding those things, I will let everyone know. Okay, everyone will be able to, but keep focusing on learning and improving, man. Don't worry about the Discord. Why you need Discord? I'm sharing everything in a live stream. You are asking me question, or I'm posting videos. Even ICT is posting videos. You don't need to do that. Okay, I forgot to reactivate my account today. I do the BIOS update and everything, like the Windows is showing it's not activated, but I have the key with me. I have to active that one. I forgot actually. After the system BIOS update. So yeah, what I was saying is look into chart in a different way, have a plan, think where is it going from. Now first time it went from just a tick above this one. This time it's the exact 50%. Look how many times it respected. So now you can trust this 50%. When market went above, gave you this, maybe you missed it here, but when it closed above this area, okay, like this high with this candle, it closed above, then it retraced to that fair value. This is where you can have your entry as well. I mean, bro, are you live? No brother, I don't even trade New York session, brother. I trade only London session, and no, I don't come live every day. Today I don't know why I'm still awake. It's like 4:38 a.m. in Australia, midnight. I'm still awake. Why, I don't know, but since I'm awake, I considered to come in a live stream. And I was actually, whatever I discussed, the same thing I already recorded for an hour. Okay, the video became 1 hour, so I thought rather than uploading another hour-long video, I will say it in a live stream. And along with that, I can interact with you guys. That's why I rather than posting the video. I'm not gonna edit this video anymore or post it anymore, since I'm on the live stream and talked about the exact same thing. I don't really need to make this video anymore. Okay, even if I make it, I will make it as short as possible. I don't know, like, it's recorded, it's already there. See the Camtasia, I'm still editing that video. I'll show you like how many areas I have edited so far. Okay, but still it became 1 hour. Okay, every segment I'm cutting out, still it's 1 hour. Yeah, I need to edit it more, but because in between I had a phone call, things like that, I had to avoid and edit out. But it's a very long video. It will be at least 30-40 minutes. Now the same thing I thought to discuss, rather than spending hour of editing the video and then rendering it, making a post on the YouTube, uploading it. It's a hassle, guys. I don't like hassle. Okay, so I'm sorry about that, but I think the session, what I said is, have the plan, have the questions in your mind, like, is this law making any sense to you? If it's making any sense, you can go. If not, you cannot enter into a long trade from any of these fair values. As simple as that. Is this high making any sense? Since there is nothing over here, I have no idea what gonna happen in the market on the upper side. But what I can see is, it has taken some liquidity, it has gave you market structure shift with a fair value right below, like right around that area, a very small fair value. I don't know, like, I'm now feeling sleepy once I saw the time, man. And a fair value above that. Okay, these two are the areas you can consider entering. However, and wherever you are entering, your stop loss have to have below this fair value, significantly below. Why significantly? Is because you see this can be a possible order block. I'm not gonna say this is the order block. Yes, it's now a order block. Why? Because when market closed above that area, it created multiple fair values around and above that area. That's why it's now a order block. Okay, so your stop loss must have to cover the min threshold and a tick 2 or whatever lower. Okay, so even if you enter from this level, your stop loss has to be around this. And now you can look for your buy side liquidity. If you think the risk to, like, the risk you are taking regarding your entry is providing good enough profit, let's say like 15 ticks risk and 22 ticks profit, I would not consider a trade like this. Like, for $300 worth of risk or more than 300 risk and then $440 profit, I'm not considering a trade like that. With $300 or more than $300, I will consider something around 600 or 550, something like that. Nothing less than 500. The more the better. Okay, I would not consider a trade like this. 15 ticks or 15 handles as my stop loss. Yes, I can reduce the stop loss, but that will increase the risk as well, because a week can easily come and stop me out, and then the market can go higher. So consider these sort of things. Ask yourself what you are doing is worth it or not. Or like, I have no reference point, right? I don't know how far it is going. Yes, it can go even higher, but how would I know that it is going higher or it is coming lower? I have no reference point. The market, the higher it goes and then later on the lower it comes, it's better. The reason behind that is, on next week I have a bigger range to deal with. Okay, so Praveen brother, yes, it's unlucky. If I'm missing so many comments, I'm so sorry, guys. I when I start to talk, I forget everything. I just talk. Okay, so If I'm missing any comment, if I'm not reading it on time, I'm sorry regarding that. And also I didn't do a lot of live stream so far, so uh, the interaction is not that quick. Okay, I had a overlay that was supposed to show all the chats over here on the, okay, that's actually showing on the live stream. Come on, I'm becoming dumb day by day. My overlay should show the chat around this area on the live stream. It's not gonna show to me. Come on. So either I have a way of moving it around this, or on the other screen where I'm keeping it right now. So yeah, I mean, guys, I don't know how much I was able to deliver to you guys. Thanks for joining. I am now very tired, to be honest. Like, it's 4:45 a.m. in Australia, and after seeing the time, I'm feeling very sleepy. I mean, after such a long time, I'm awake until this far. Okay, the days I was learning these things, that is when I was awake, like early, even sometimes at 7 8 a.m. in the morning. I went outside, grabbed a like short breakfast from the shop, and grabbed a coffee for myself, came back home. I was eating it and watching ICT videos. This was the life, man, during those days. Okay, so all these videos that I have watched, practiced, read, and like took note, then made it together, practiced it, watched it, everything. Why I'm saying this fair value gap is important to consider that as a order block. You can consider anything as your order block. No one gonna say anything about that. Okay, this can be your order block since it took the liquidity traded into a fair value gap. But when market is trading above that area, if it fails to create fair values like this order block is very weak. It's a weak order block if there is no fair value like this. Same thing, fair value, it's a strong order block. Look, first all these lows, where the lows are stopping, the bodies are closing. The only time it came a bit lower, it came because of that fair value. Fair value retested, immediately market started going higher. After that, the high or the weak of the order block, that level, when market went above it, price didn't even came to that level, it started going higher. Okay, so okay, brother, don't say that. ICT lovers will kill me. Okay, don't say that it was confusing and mine is clear. I'm saying the way I looked into the chart, it's confusing. That's why I have taken that many notes. The video I have uploaded from my mobile phone, like I captured from my mobile phone showing my trading desk, that video. This is not even half of the notes, guys. The notes you can see on the video, it's not even half of it. I have so many A4 size papers, like I bought for my printer, and I finished it by writing the things and drawing the things, okay, with pen and paper. The like I have so many, like when I was learning this accumulation, then manipulation, then distribution, then retracement, then the buy side delivery one more time, the dealing range type 1. I have, you have no idea, like with pen I have drawn everything. Then when the this retracement liquidity, if market fails to take that buy side, and from a certain level it comes and takes the retracement liquidity, which is here, I'm drawing this again with pen and paper. Then how am I looking into a trade? I'm looking into a trade when I'm getting a retracement to a fair value, or if it can create something like this along its retracement, I'm taking into a sell short from this area for that. Like, look how many lines I'm drawing, a step by everything I draw like this. Okay, that's how I showed it in my videos, and I observed it. That's the way I observed it. Okay, so this entire range can be a possible order block, and this can be order block since it has taken all these liquidities coming out from the midpoint of that week. But I would love to see a fair value retest, although there is no fair value, but it is what it is. So this is, that's why I said a possible order block. Why? When market closed above that high or the order block level, it created one fair value, it created very small, right? So that's why I'm not willing to, you know, use this area for a entry towards the upside. And also, you know, like it's trading all time high, so anything can happen at any moment. So without looking into higher time frame, maybe 15 minutes or things like that, but I'm expecting this can be a possible order block. As I said, that's the opening price market is tapping after closing above. This is the area it came, but it would be better if it can come to the extreme one, okay, like this one. Maybe the body close inside of this small fair value and we came here, things like that. If it will not in time, that's the result. Highly appreciate. Thanks, brother. And I mean, it's everywhere, man. When you are talking about something, it happens. When I can feel the struggle of ICT, right? It's ICT created all those, okay, whatever the concepts are, and he is teaching us. We are learning from someone. Something is already done by someone, still we are finding it hard. Now think about ICT when he was looking into these things and creating those concepts, okay, or thinking about the names as order block, fair value gap, equilibrium, consequent encouragement, then mean threshold. I mean, come on, man, just think from his point of views or his shoes, like walk into his shoes. I don't know, like how much dedication, effort a person has to have to go to this far or this level. That's why I have respect for him. But I have a lot of things in my mind too. So after the Robbins Cup, the respect level will go either super high or it will come little down. Okay, little, not too much, little. Let's see what happens. Why I'm saying this is because so far he has said so many things that is conflicting. For example, he said a order block, mean threshold you should mark from high to low, and somewhere he said you mark from the opening to closing, the body, the middle point. Now a lot of areas the high to low as a mean threshold works very good, and if very specific areas the body open to close, that works very good. Now I have talked about it later. Let me find out that one single candle that I was talking about before, if you know. Okay, so this, even this concept created a very big conflict. Okay, here I think this was the area, if I'm not mistaking, but let me show you one thing. You see this, okay, even though I'm not saying this is a order block straight away, but you see this. I mean, no, this is not the one, because it's actually aligning inside of the body. Let me find out that one. I actually forgot where I saw it. Okay, let me just give you a random example. Okay, I don't know if this was the one or not, but okay, this is the one, I guess. Now see this, the mean threshold and the opening price is the same level, right? It's the same level, that is the mean threshold. In this sort of area where the opening price or above the opening price you are getting your order block, look from the open to close and look at the reaction around that area. Okay, when market went above those highs or those two black candles created fair value, this was confirmed. Now you are seeing the body. Okay, this is the mean threshold of the body, but if you look into the mean threshold from the low to high, now you have multiple candles closing below. But when you're looking from the body to body, see the, look at the stop here, and this candle came until the closing, but nothing closed below that middle point. Then the candle traded above one more time, like it closed above that or entire order block candle level, which is this level. Okay, that's the extreme order block's entire level. When it closed above second time or the final time when it came, if it's the mean threshold, then this is where you look for your exit, because when the mean threshold was violated and then market is closing above, the mean threshold again should not be tapped if it wants to go higher. Now this is the mean threshold, this is where it came, closed above, mean threshold should not be tapped, market came to the opening price a bit inside, never came to the mean threshold, it started going higher like this, took the buy side liquidity until this high. Okay, so that's the only area where I look into the body now, and before that I was looking into both of the areas. Okay, and now it's creating conflict that which area, if market respect, where should I look for my exits. Okay, if I look into the mean threshold from this low to this high, if this is the mean threshold, I'm looking for exit already, and I might be out anywhere these candles. The moment I saw this and the next time market came and reacted or rejected from the upper portion, I know that I don't have to look for an exit anymore. I can hold my trade. If it comes lower, it stops me out, no problem. This time it didn't work. It will not work 100% of the time. Even it doesn't work for ICT 100% of the time. But I have confidence that now it's going higher, and that's exactly what it did. So this is where I look into the mean threshold from body to body. Look into your chart, find order blocks if you have studied those things, if you know what exactly order blocks are, how it forms. Then look into the order blocks for a bullish order block. If it has a very long wick on the lower portion, let's say like, let me actually find, let's say this is your bullish order block. Okay, let's like, sorry, bearish order block. If you see a long wick on the lower portion, when you are drawing your mean threshold, it's coming below your opening price, but this opening price is very important. So in this case, you look into your order block from the body so that you can have the middle point of the body of the candle. Okay, that's now this is not a order block, don't think like this reaction I'm seeing from that. Okay, because this, it was supposed to be a bearish order block. If I was showing, I'm just showing from this candle because it's in front of me. So instead of drawing your mean threshold here, which is below your opening price of the candle, if this is how the mean threshold is looking, look into the mean threshold from the body, like open to close, whatever the middle point, look into that. Okay, you will find the reaction from those sort of areas. Now this is my personal observation. ICT said to look into the mean threshold both ways. I'm looking into the mean threshold both ways this way. Only when the mean threshold is sitting below or above my opening price, depending on the type, like bullish order block, if it's above my opening price, I'm looking into the body's middle point. If it's a bearish order block, if it's below my opening price, I'm looking into the body's middle point. Simple, nothing complicated. Okay, so yeah, I think as I said, I will be looking into the Robbins Cup result. Okay, don't get me wrong, I'm showing my PNL, I'm showing my trade executions on the channel, a lot of things, right? But I'm not showing my losing trades, I'm not showing my overall gain by this long, nothing like that, but at least I'm showing some of my trades that the prop firm I'm using. I'm showing that why I said that this way. Okay, now on the ICT's channel you will see so many perfect executions on his channel, so many, like I don't even know how many perfect executions he have. Like he put very small little fair value stop loss, and then he, like whatever the execution videos are, okay, very small stop losses, market came close or never came to that stop loss, started going, things like that. But in live stream, wherever he tried to execute back to back all these days, he lost all of his trades, all, like these days, all of his trades. Wherever there was scalping, something is live price action, I don't know, like last week, last month, whatever, most of the trades he lost around the live stream. I have no problem seeing that. Even if I try to do it, I will lose. The problem is during his live stream no one can talk with him. Some people might have questions, try answer that question if you can. Okay, maybe not to everyone, but one or two, maybe ignore everything, just in between read one or two, the way I'm doing. Okay, I'm not saying I'm not reading all the messages. Maybe later on I'm coming back and reading and replying, because I can see you guys are still here. Now same thing here. Now another thing is, in his Twitter space he said, I don't trade, I don't earn money by trading. Then again, you have no idea how much I earn by trading. Same thing, but conflicting things. Okay, like one time he is saying I don't trade, I don't earn money by trading, I have earned most of my money by my mentorship and my YouTube. If you missed that, let me know. I will try to give you guys those things. Okay, like especially Faisal brother, if you haven't watched any of those videos, I will send you one. Okay, but don't hate me or ICT for this, because as I'm saying, like lot of things we talk for longer time there, it creates conflict. So we are talking about something, we can jump into another topic, things like that. So there are so many things, okay, so many things negative that throughout his live stream people pinpointed. Okay, he even tried to fake a withdrawal, and later on he said I intentionally photoshopped that screenshot or that photo, and then made fun of people, wanted to see blah 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 things, a lot of things. Now all these days, all the controversies, people came, show your level 1 level 2 data, whatever that means, I have no bloody idea. Okay, I don't care about those things, but never ever he showed any executions or any reports, any history from his trading. I know, like it's okay, I'm sorry if it's conflicting or if it's creating a thing, but I don't hate him, I respect him, because as I said, I'm still a support resistance trader. Okay, but he helped me, or his concept helped me to understand that when a retracement happen, why and how far it can go. He gave me the way to pinpoint those things. Okay, my profit, a lot of my concept may differ from even what ICT said, but with his information, with my previous knowledge, whatever it is, combining all together, I'm trading this way. Okay, and I'm getting the result, man. Like one single account that I passed just less than like 3 weeks ago, I have already withdrawn 12,000 Australian dollar with that one single account, and I still have over 15,000 dollars as my balance over there. I have no problem. Okay, if it works, it works. his concept works, I'm happy to see that. Now I want, since he never shared anything, this is the thing he said, like on his Twitter he has posted so many times, this Robin Cups, I'm gonna blow everyone's mind, I'm gonna do this, drag them on the stone, things like that, a lot of orbs previously, okay, before this Robin Cups. Now recently he is saying, I never registered for the Robin Cup. Yes, I tweeted lot of things, but I never registered. Whenever I will register, everyone will know. But everyone else has said every single of those Robin Cups he had very big loss or drawdowns, things like that. Now I don't know who is telling truth, who is telling wrong, but he is posting on his Twitter that I'm gonna drag people down. Again he is posting or saying that I never participated before this time. This is the first time he made it public. So this is where I'm willing, I have huge respect for this person. So that's why I'm still waiting to see exactly what he can do. Okay, whatever it is, the result of the Robins Cup, I want to see. I don't want him to break the record or create a new record of what was that, I think 14,000 something, the all time, let me check. 11,370 Larry Williams. I don't want him to break these, okay, but at least I want him to do something like this. Okay, Patrick Neal here, this is here, and that same Patrick Neal here. The, like, I'm just showing a random name, okay, don't get me wrong, but what I'm saying is somewhat around this top 5 leaderboard could have been good. Or as you can see, like, there are some guys who have won the same cup multiple times, like around, I forgot the name to be honest, but see here, like Larry, that's the one and only time Larry Williams. No more Larry Williams anywhere. Okay, but this guy Mike, back to back again Mike. Then if I'm not wrong, I saw him above somewhere around this area as well. After that, I never saw him, but I don't know, like back to back, like within 4 years, he became champion for 3 times. So whatever happened here, I don't know what happened after this specific move of winning trade, and then Larry Williams never been seen in any other place. Okay, so this thing, I don't know what happened, but this sort of thing I want to see. Okay, like back to back 3 times within, like not back to back, 3 times within 4 years. Then there are some other people multiple times they have repeatedly won, things like that. So I want to see something like that, not something that Larry Williams once participated in the challenge or competition, got a shit ton of profit and never showed up again. Okay, this guy here 716%. Now Alexander, I don't know if he has participated anymore or not. Why they never showed up, I don't know. If they wanted to protect their thing, like this guy, back to back champion with 21%, so what? Still this guy back to back. Okay, he's showing up. This same guy, see here, 2007, then 2009, different things. Okay, fourth quarter, this quarterly things or whatever, I don't care, but I want to see something like that from ICT. When that gonna happen, I will just go to those channels who who disrespected ICT or disbelieved ICT. I will go to those channel and talk about them later on. Okay, because I will make fun of them, but until then I'm not like blindly following him, not blindly. I have my own things. Even though I saw so many equal lows around this area or this area, I still considered a buy long. Okay, so with ICT concept, this is not something you can consider
going for a long from this sort of area. And similar thing I did when I saw, where is it, I forgot exactly where I was looking into that part, but anyway, similar thing I did before as well. So yeah, I mean guys, I should go 5:08. I can say my morning prayer right now and then go to bed, okay, which is not ideal, but it is what it is. So I hope it was valuable, and until next time, take a very good care. Remember guys, those 5 questions, or you can build your own question, that up to you, but must have some plan before you execute. And yeah, losing is inevitable. As long as you have a proper risk management, it gonna work out. So until next time, take a very good care of yourself, your health, and your family. Bye bye. Bye brother, you should take care, and you should not be in the stream now because you are sick. Unless you are feeling good, still take rest. You are sick, okay? So yeah, bye bye everyone, take care, bye bye.